Okay, and we are live. Roy, how's it going?
Going well. Another wild week in the markets. And of course, it's winding down a little bit here soon just because of Thanksgiving, a little bit lower volatility. Lots of news beforehand. So, how are you, Tevis?
Good, man. This is actually my favorite part of today. I've just been in meetings all day long. This is my first Celsius of the day, so I'm gonna cherish this on stream as people start to roll in here. I think we have a lot to talk about. The market turned around a little bit, and now we got to ask ourselves: is this going to last, or is it not going to last? You shared some Robinhood news with me, like 5 minutes before the stream. And I haven't read it yet. So I genuinely don't know what this news is yet. Maybe we save that and we talk about it in 10 or 15 minutes into the stream. What do you think?
Yeah, let's wait just a few minutes and we'll do that. And now, if you guys are new or if it's been a little while, the way Bootleg Weekly works is we have a number of topics that we'll go through. Questions related to that we will usually get along the way. Towards the end, we have rapid fire Q&A. So if you put something out there like, hey, what do you guys think about BlackRock and investing in that? It's like, well, we'll tell you, I don't know, in like an hour when we get to the Q&A period. So
yeah, and if you ask about PayPal, we're going to be here all night, baby. So
yeah, there's news there, but I'm like, unless somebody asks about it.
Yeah. Also, there's some other big breaking news. Congrats on 10K, man. That's huge. That's a big milestone.
Yeah, I knew I was getting close. I think you were the first one to wish me congratulations because you did it early, which I'll take every day. But yeah, I was like, man, I must be getting close. And so I looked right after I was getting off of work today. I'm like, it was at 9999. And I'm like, oh man. And so I checked 10 minutes later, 9999. Check an hour later, same thing. 2 hours later, same thing. So this just happened. So thank you guys for this journey. It's been incredible. It's been a little over a year now, and been a fun thing. Feels like a lot longer just because I've been co-streaming with you and with Tevis, with Amit as well. Well before I had a channel. So
yeah. Congrats, big congrats, well deserved, absolutely. I just hit 25 this weekend. Isn't that crazy?
25 years old, man. I thought no, just kidding. 25K, man, that's awesome. Congratulations.
5 years old. Fuck.
Yeah.
Yeah, honestly, it's the BMNR videos, man. There is definitely an audience for those, and it's going well. I saw you also posted quite a few. I saw 2 or 3. I commented on a couple that I watched of the BMNR videos, and yeah, they do fairly well. That's an interesting one. It was up 20% the other day, down 7% today, up 2% in after hours. Like who knows with BMNR, you know?
Yeah. Like so, I usually plan on doing one BMNR video a week, but if there's really nothing, I'll skip over it. But then they had I think I did one like on Monday or something because just everything was falling. And then, so this is like a week ago. And then they had earnings, which we'll talk about here in just a second. I think maybe we'll start with BMNR. Usually we save it for the last. What do you think?
We can start with BMNR. That's fine.
I'm going to mark it down. And then, so they had earnings, and those were it's a very different company than most equities. So the digital asset treasury thing. And there's some weird things there. Recently announced a new CEO, a couple of weeks ago. And then like a 20% move in a day is like, I'm going to talk about whatever stock moves 20% in a day, just because why? Like that's what I would want to know if I didn't know. And some of it's unknown, just the way that's at. So yeah, I like it when it's going up 20% more than down 20%, but that's just me.
Well, okay, so let's go in reverse order here, reverse chronological order. Yesterday, these guys came out and they do their Monday updates consistently. And yesterday was the latest in their Monday updates. And they said, hey, we're holding 3.63 million ETH tokens, which is about 3% of the total Ethereum token supply. That's 2/3 of the way there to their 5% target. The other thing they announced is, of course, they have $800 million in cash. And it seems every single week they're raising more and more cash. So obviously the dilution point is the main thing to talk about there, because last week they had fewer Ethereum tokens and they had $200 million less cash. They had about 600. And so now it's like they have 800 and they have more ETH. Well, what gives is really the fact that they're diluting their shares. I also want to throw up the investor deck, but first, Roy, do you have any thoughts on just this latest announcement?
Well, I mean, it's let me pull this up just to show, because I think this does a better job. Pictures with 1,000 words here. I was a little bit concerned. I mean, not like super concerned, but right when they did their earnings, the nice thing about the earnings, I wanted to know two things. We got to know both of those. And one of those was share count. And so they gave us an updated share count as of Friday morning, I think, November 20th. And so we knew exactly where their MNAV and their NAV was. So specifically, they were trading just slightly above the premium. Now, what this means is they're in a tough spot, because if Bitmine was trading way above, great, they sell shares, they buy undervalued Ethereum. Way below, there's a few things they could do, but they've got a lot of money. I think they had 600 million at the time when they reported. They have Bitcoin, 192 of those that they can sell. They can sell the stupid orbs thing that they should have sold a long time ago, but whatever. If they're like ridiculously undervalued, I think that they would probably never do this. But like if they're trading at like 1/10 of their value, they would sell Ethereum and buy back their stock. Would not be a fun moment, and I think they'll want to make sure they have 5% first. So anyway, they managed to accumulate, and we've seen based on the earnings reports, this isn't dilutive. They've been selling at a premium and then buying Ethereum, which relative to Bitmine is at a discount. So they continue. It's slowing down. You can see the rate has slowed, but if you look at their peers, they're basically stuck in the mud. So with that big 20% update, they have more of a spread between their actual MNAV and their stock price, which is a great thing. It helps them accelerate. When do you think they get to 5%, Tevis?
Honestly, at this rate, I think probably sometime in January would be my best guess. End of January, just the rate that they're going, they're adding like 200,000 tokens per week. And so you can just extrapolate that out. And I think by January, we're definitely going to be there. They're more than halfway of the way there, right?
Yeah.
So that said, let me pull up their earnings report, because I think that had a couple of the key things. So, I made a post on X and I said, look, there's a couple of things that I'm looking for BMNR earnings. And one of the things was, when are they going to do staking? The second thing was, what are their outstanding share count? And the third thing is, what are they going to do with the proceeds from staking? And they answered all of those questions in the earnings report, which I thought was really well done. So here we have the earnings report for BMNR, which came out on Friday. And I just want to skip right here to the staking update, because this is the main meat of what everybody is really looking for with regards to BMNR. Is what are they doing with all of this Ethereum that they're holding? And they announced that over the last few months, they've been evaluating different providers to launch a pilot program to scale their own validator network, naming it Maven, that's going to launch in the first calendar quarter of 2026. So probably sometime in January, February. They also have their investor day shareholder meeting on January 15th. So we're definitely going to get more details on January 15th as to what they're going to do with regards to staking. But essentially, staking, they haven't been sitting on their hands. They've been evaluating options on what they can do the best. And they came to the conclusion that something off the shelf, while it exists, is not going to be the best option for them. And they want to build their own validator network. They also announced this dividend. And I'm curious to get your thoughts. But basically, we're going to be slightly richer before the end of the year, because they're paying us 1 cent per share. And I think, for me, I did the math and I was like, oh, great, I'll buy like a McDonald's meal or something. But the dividend, I think, had some mixed sentiment, right? Some people are really excited about the dividend. Other people are like, why are they doing a dividend? This doesn't make really a lot of sense. I kind of like it, but those were, I think, the two main pieces. Look at this guy. Those are, I think, the two main pieces in terms of their big update. So let's start off with regards to staking, and then we can talk about the dividend.
Yeah. So the staking was, I don't know, like we have a few details there, but not a lot. This is, by the way, a little bit different earnings call because companies don't have to do it this way, but most companies will do a live call where they'll go over all the financials and stuff. Financials, I can't say are irrelevant, but they basically are. Like they posted a colossal EPS beat. Doesn't matter. Like that just due to some accounting changes in the valuation of ETH during that quarter and the massive pivot in their model. But yeah, no live Q&A, so there wasn't an opportunity for analysts to ask questions. I think that there's enough interest in digital asset treasuries that they probably would have gotten some. So I hope that they do that next time, even if they just kind of like, hey, this is where we're at. This is where we're at. Good, here, 5 minutes, Q&A. Or shortest earnings call anyway. So the Maven thing, I would have loved more details on that, but we'll have to see what it looks like. Sounds like staking is coming soon, just because they gave us a timetable of that early next year, so probably a January, February type of thing.
Yeah.
I'm sure that some of it's going to be traditional staking, just because they want to be and they need to be a validator network. But I'm really curious what the plan is. Like, could this be an element beyond what Bitmine already has of differentiation, and something that others actually emulate and follow with the Maven, the Made in America Validator Network? But so I'm fine with it, and we needed an update for staking, by the way. If they said nothing about staking this whole earnings, I would be like, maybe I'll take off my vertical spreads. I don't know. Like, why are they leaving money on the table, even if it's like a 3% yield? So, and I think that, by the way, that this staking revenue that will be coming soon, it's a small yield, but it's there. It's one of the differentiations between Ethereum and Bitcoin as far as a digital asset treasury. I think that's probably why they did the dividend. But what were your? Did you have any additional thoughts on the Maven, the staking stuff?
I do, yeah. So I think the validator network is absolutely the right way to go to build something in house, because I think it was Batty that also is that how you pronounce it, or Beatty? I don't know, Batty, that also highlighted
Batty.
this. She said it sounds better like that. She said that they can also use this validator network as a service for others to essentially leverage Maven, and immediately that's an interesting alternative path that they can work with other, Wall Street institutions that might want to also have, a stake in the game, no pun intended. I think the other piece that I was thinking out loud is, by not going the third party route and by building this in house, I wonder if the staking yield is actually going to be a little bit more lucrative than what I would get or what you would get, right? It's going to be better because there's no middleman. Of course, as more and more institutions start staking their Ethereum, the yield is going to go down. I think just basic supply and demand is going to dictate that, because we saw BlackRock, for example, is starting their own staking ETF. And well, all of their funds in Ethereum, if they stake all of those, well, it's going to become a very crowded pool. And the yield that you're going to get as a result is not going to be as high. But the counter argument to that is that because all of this supply is locked up via staking, theoretically speaking, the value of Ethereum should go up on a per coin basis, because there's fewer coins on the outstanding exchange reserves. So I think it's more sustainable for them to do the validator network. I think there's also that wild shot. So more sustainable. It's going to give them a better yield without going through a third-party middleman. And then there's also a wild shot to offer staking as a service later on in the future, which I think they're definitely going to tap into and speak more in January.
Yeah, and if it's giving higher yields, I could see others tapping into that too. And here is, by the way, related to staking, and one of the reasons why it's important, if you can throw this up, it shows the supply staked over time, and you can see it's up and to the right. But keep in mind, we just saw Bitmine has over 3 million Ethereum. They're going to own 5% of the supply. They've not staked yet. And so we'll actually see this be meaningfully above 30%, which is awesome. It's good for the system. It's good for the ecosystem. It's good for our shareholders as well. So, so the dividend, like, do you think that, so actually first on the dividend,
yeah,
there's a saying, as you get older, I can't remember the exact saying, but dividends are more and more attractive, like the older you get. And that's what it typically appeals to. Although if you're a boomer at heart, like Steve, then, you've always been attracted to him, even when you're 3, just because you're a boomer. even though you're not. So I am becoming a dividend investor, the other non-traditional way. And so now 2 of my 10 holdings this quarter announced dividends, and they weren't dividend companies before. So now I have 3. Do you know all 3, Tevis?
NVIDIA, BMNR, and hold on. Does PayPal pay a dividend now?
They just started. Yep. They had the X day late last week. So yeah, it's that's the other way you become a dividend investor, is by shareholders asking for whatever reason, time and time again, win dividend, and then you get a 1 cent dividend and you feel rich. So,
well, okay. So I want to bring up some of these comments because, dividend, I think it's cool, but it's mostly for the future. Dividend is just marketing. I understand that like the 1 cent is kind of a joke, and everybody can see through that. It's totally a joke. But 1000% agree with this comment right here. It is to establish a precedent from a regulatory legal perspective, especially because they ruled that now you can distribute staking rewards across investors. I think this was a Congress. It was tied to one of the crypto bills. And so as a result of that, if they introduce this dividend now, even before they have staking, once they start generating $400 million in net income through staking, then they have at least the mechanism to pay that out as a dividend. So it won't be 1 cent. It might be $1, at some point in time in the future, if and when they decide to distribute their staking rewards. But there's also still an outstanding question about, are they even going to distribute their staking rewards, or are they just going to drip back into Ethereum, right?
Yeah. Well, this is one of a couple of reasons beyond that I think that they did the dividend. So one is also that they're eligible for ETFs that only contain dividend stocks. It's kind of like the same idea as NVIDIA's dividend. Some will buy it that would not otherwise, which, I mean, that's weird when it's such a small thing. But MSCI, which has a whole bunch of indices and ETFs, they are weighing whether or not to kick out Strategy, MSTR, formerly MicroStrategy, from the S&P 500, and it could have implications on other digital asset treasuries. Now, Bitmine is relatively new, so it's not really a part of a lot of those, but that's something that could have ramifications on it and others as well. And so I think Bitmine is the main argument seems to be around the debt levels that they're concerned about and the potential liquidation event, even if it's very small and unlikely. I think for Strategy, even though I'm not a shareholder, of course, Bitmine has no debt. They don't. They just Ethereum sitting there. And it's really funny, Tevis, like people that don't know what's going on with Bitmine, they just look at the chart and they're like, well, it was recently like $3 a share, so it's probably going back there. It's like, really? Okay, you're telling me that people are going to be selling dollars at like 20 cents each? I will buy all of them. Like, what are we talking about at that point? So they don't realize like there's real value there in Ethereum. That's the MNAV. That's what they're actually worth. And they might trade under that, and I think they will in bearish times and over that in bullish times. But yeah, regardless, the other thing is I think the dividend is, partly for optics too, of like, okay, if MSCI and others also follow that lead of removing Strategy from the indices, this may be something where they're like, okay, we're actually okay with Bitmine because they don't have debt. And also there's a yield in Ethereum. And so they're paying out some of that, and they'll probably increase it over time based on staking revenue. I'm like, so if that works to preserve this, like it is a good thing to be a part of other indices. But yeah,
I think it's also something to field objections around why wouldn't I go into ETF, for example, or something that's more like a yielding ETF. Like if they can compete on that level as well, to say, well, actually, we have a negligible yield right now from a dividend perspective, but once we start distributing the staking rewards, then we will have a more aggressive dividend. They can compete with BlackRock's staking ETF. They can compete with, all of these other offerings out there on a one-to-one basis, right? Because it's just to attract more institutional money, I think. So I'm bullish on it. I think we're going to have to wait and see what happens until January. Really excited to actually get this show on the road with regards to Maven. And, look, this thing did trade under NAV, right? At the bottom of the dip, where was it? Like $23, $24? Like it traded under NAV. And so what happened? Well, the market had a slight tick up with a relief rally, and this thing bumped 20%. And so to Roy's point, you're buying, pennies on the dollar at that point, right? So unless you think Ethereum is going to zero, or unless you think Ethereum activity is going to die down and fewer transactions are going to happen on the network, then those dividends are going to keep coming in. And the value of Bitmine is going to keep rising. I think the consistency that they've shown is also something that's really compelling. Not only are they the biggest in the space, but they're the biggest accumulator on a consistent basis.
Yeah. Actually, so real quick on the comments, I do see a lot of people postulating on Steve's age. I think he has, I know, said publicly. So he is a little younger than me, actually. So he's not a boomer. He's just a boomer soul. So also, if you could throw up Leroy Leon's comment at 620, we should address that too. So just so we're clear, he says, you guys still don't understand if you are bearish MSTR and Bitcoin, you are more bearish on Ethereum and Bitmine. We're not bearish, or at least I'm not bearish on any of those. They're all cyclical. They're all likely tied together. I'm sure that, MSTR is going to do well. It has done well in the past. I know there's some compression there in that premium for the NAV. But yeah, my only DCA, literally, that's consistent every week. I do have the world's slowest one in Palantir, but is in Bitcoin, not Ethereum, not BMNR, not MSTR. It's Bitcoin. Week in and week out, it's set and forget. It does it automatically, a set percentage of my income. I don't own MSTR just because I'm exposed to so much crypto, and I didn't really fully understand the strategy. I'm also a little bit less comfortable, even though I understand it, and I think Saylor is, at the helm, and he's doing well there. I don't like colossal levels of debt. Even though I don't think the liquidity event is likely, I would put it at like 1% for MSTR. But yeah, not bearish on any of these. The reality is, though, at some point, all will go through a crypto winter, and will not be fun to own at that point. But I'm just going to hold through.
Yeah, I mean, I would tend to agree, right? Like it's you can draw parallels with real world, examples, because Bitcoin is most compared to gold. Why? Because it's a store of value, whereas Ethereum has a utility layer from a transacting perspective. And so the thesis is, and the macro thesis is fundamentally the same. If you think that the world is going to go away from fiat and towards crypto because of the massive inflation and the centralization in fiat, then obviously you're bullish on both. But then diving one layer deeper into the thesis, if you think that more transactions are going to happen on Ethereum and it's going to be a transacting layer, then you're going to be more bullish on Ethereum than you are on Bitcoin. But I think Bitcoin is like the sort of entry-level gateway drug to a whole bunch of different protocols on the ecosystem, right? So like Bitcoin is like, more, they have different use cases. They serve different purposes.
So can you throw up Visa facilitated 3129?
Are we doing questions at the end or what?
Well, it's related to what we're saying. So
Sure.
we already going to do Q&A at the end. So for myself, I think once you get to a size which makes you a little bit uncomfortable in Bitcoin, which I'm not there yet at all. I'm not a whole coiner for Bitcoin. But if I was, then I would have most of it in cold storage. If you're not familiar with what that is, look it up. I actually need to start researching at some point because I may be a whole coiner, probably not next year, but maybe the year after that, just the DCA strategy. Anyway, if we have a crypto winter, I'm going to accelerate things quite a bit. And I think we will over that time. So since I'm not there yet, I just leave mine on Robinhood. The reason why is I kind of like everything on one platform anyway. And then they had a matching bonus. I'm fine with the platform. But yeah, if once Bitcoin gets to a sufficient enough size, cold storage, I don't, at that point, a good chunk of it.
That's what I use as well. And the cool thing about a lot of these wallets is that they also have the software built in where I can just buy, sell, as well as send, receive, as well as stake, just strictly from the wallet itself. I actually bought some Ethereum over the weekend, and I have a wallet that I used to use that I don't really use anymore, and I moved the majority of my funds into my main, cold storage. wallet, and I bought some Ethereum and I put it into this wallet that I didn't use anymore, and I had to do like all the firmware updates and all of the housekeeping essentially. And I realized that the fees are way better if I just had bought through the wallet directly versus through my actual exchange. I'm like, why am I still using an exchange like a boomer? I can just go into my wallet and I can just purchase through there. And so it was an interesting realization, because way back when, you didn't have that option. You had to go through the exchange.
Yep, that was the way it was back then, which was terrible. I just closed my entire thing. I had the next topic ready to go, so let me restore that real quick.
Sure.
So anything else that might before we pivot to Robinhood?
One way, Leroy, just to sort of add more color onto your thing, like one way I've heard it explained really well is like Bitcoin. The way to think of Bitcoin, at least how I do, is it's like raw land, right? They're not making any more of it. You're going to buy the land, you're going to build a house on the land, and you're going to hold it, and the value is going to go up just strictly as a result of scarcity. And Ethereum is more like the electricity grid. Obviously, it's not a perfect analogy, because in the real world, the electricity grid is built on top of the raw land, and Ethereum and Bitcoin are sort of like two different things altogether. But the electricity grid, in the sense of the value from the grid, is as a result of the energy that it transmits as a result of the activity in the underlying population. If people stop using appliances, let's say, the grid becomes less valuable. So Bitcoin is essentially a store of value that's finite, that goes up over time as a result of scarcity, whereas Ethereum is a utility network that's more fluid and dynamic based on where the transactions are happening and where the activity is happening. So the more applications you have, the more developers you have in the Ethereum ecosystem, the more transactions you have, then the more vibrant, theoretically speaking, the Ethereum token will be from a price activity.
Yep. And related to that, the Fusaka upgrade is coming soon too.
Yes.
So my most recent Bitmine video, and I'm sure that you did it as well, I talked a bit about that, but I mean, that basically what it is in a nutshell is it helps scale Ethereum so that they can do more transactions per second and at a lot more efficient rate. So it's a lot cheaper as well. Great for Ethereum, great for level 2s, great for institutional adoption. Some people think it's deflationary. I don't think so. I think it's actually maybe slightly less deflationary than where they're at right now. But that's an exciting upgrade coming soon.
And what wallets do we recommend? I think Trezor is currently the best one. I think it's completely open source for Trezor. I know Ledger was good way back when, but there had been some issues with Ledger whereby like they could access your stuff. So I think Trezor is actually the best one currently. Roy?
Yeah, and I would need to put in, it's been, I don't know, 5 years since I've researched wallets. So I have no idea. I've only used one wallet, and I'm sure there's better wallets out there now because it was really mediocre. So, yeah.
Cool. Next topic.
Breaking news, Robinhood. Can you?
Okay. What is this news? Let's hear it.
You're gonna like this. You don't know what it is. Any guesses before you bring it up? Don't look.
Well, I think you told me it was like betting related.
Kind of, yes. All right. So currently, to set this up, Robinhood partners with Kalshi and also one other company as well to do their predictions markets.
Yeah,
a lot of that is sports related betting. Not all of it is. The way that they do this with Kalshi is known that when you place a prediction, no matter how much that prediction is or how little, per contract, you're paying effectively 2 cents. There's a bit of a spread there. And so 1 cent goes to Robinhood, 1 cent goes to Kalshi. I don't know if it's still currently true, but Robinhood at one time was 35 to 40% of the volume of Kalshi. And so there was questions and thoughts on, would Robinhood go alone at some point? Now, they partner where they need to partner or where it benefits them. But they tend to start there and then do vertical integration. Now, 3 weeks ago, I believe there was a fireside chat. Stephen Quirk, he's one of the higher ups at Robinhood, really amazing guy. He ended up basically saying, hey, there's this pattern at Robinhood where we partner first and then we go it alone after this. Now, this is a partnership. This is the announcement is Robinhood extends its prediction markets, offering through new joint venture and partnership with Susquehanna to operate CFTC licensed exchange and clearinghouse. So This is a market maker. They don't do exactly what Robinhood does, and there's a couple of pieces to this. So the main thing right here, the independent joint venture will serve future commissions merchants, that's FCM platforms, with futures and derivative products, including predictions market. So a lot of, let me zoom that in. A lot of this is about predictions market for sure, but this is both an exchange and a clearinghouse. Along with it, there are a number of smaller acquisitions, and you guys can read about that. But yeah, they're up to 9 billion contracts, by the way, now, which is just insane. Now, real quick, what Robinhood now? I guess there's two pieces to this, and then Tevis, we can talk about either of these or one of these or both. This says right here, the independent joint venture will serve future commissions merchant platforms.
Plural.
And it's not a mistake. IR said yes, not a mistake. So
okay. Hold on. Before we get into that, help me understand what am I looking at here. So Robinhood partners with Kalshi, and now they're no longer for betting markets, and now they're no longer partnering with Kalshi. They just got approval to essentially do it on their own.
Sort of. So this is going to launch early next year, begin operations 2026. Well, maybe not early. So it's going to take some time. They'll be with Kalshi for a while, and I can't remember the name of the other one that they started with, but both of those are still in play. This may be how they expand this product internationally. There are a lot of places as a wallet where they're not yet as a brokerage, and some places as brokerage that are just beginning to roll out. This helps them basically internally. There's I don't know what the agreement exactly is with Susquehanna, but it's accretive. So if they decide like, hey, whenever this launches, we're ready to go this alone, and they just want to keep the money, this effectively doubles the predictions market revenue like that. I mean, probably a little bit less, but it's really close. Or they can go the Robinhood method of, you know what? We are not only going to do that, but also provide this at a lower cost than anybody else. They're already among the lowest, so we'll have to see like what combination there's give and take with both. And then the last piece that's really interesting is that platforms is plural. This would be their second institutional offering. They bought Bitmine previously, and they've included them. A lot of that revenue for crypto buying on that platform is institutions. They're going to do more products off of that. But yeah, this is a big one, and it's for more than just predictions markets. Predictions is a futures product, but futures, derivatives. One last piece there. A long time ago, before I was an investor on Robinhood, their clearinghouse was Apex. A lot of people use Apex. And then Robinhood is like, you know what? We partnered. Great. But there's a lot of efficiency gains if we go it alone. So they are also their own clearinghouse as well. This looks like it's one step further as well, because it's not just futures, but also derivative products. And so they're going in-house. But the biggest ramification is for predictions market as well. So very exciting, I think. Yeah, I figured this was going to happen at some point. Didn't know how or when, and here we are.
So basically, they're going to undercut Kalshi, and they're going to undercut Polymarket, and they're just going to capture way more market share because they already have the established network. Is that what I'm to understand here?
Probably yes. And we'll see. Whether they undercut or they're like, hey, we're good with volume where it's at, and we're just going to double our revenue or some combination thereof. I'm sure they'll do like promotions and a lot of things. They in this, they also talked about basically being able to do a lot more with it. So they said by introducing a robust institutional grade exchange to the market, we'll add more choices for consumers. And you can see that they've actually started to do parlays, which I know a lot of people were interested in. And we'll also gain the flexibility to build faster and deliver more contracts and services to traders. Now, if this was like 90% of companies out there when they're like, oh, that's the institutional grade and more choices and flexibility and build faster and deliver more, it's like, yeah, we'll see it when it actually happens. Robinhood does this sort of thing. They launch products, they handle acquisitions about better than anybody else. I doubt that this is going to struggle, that we're going to see basically a whole lot of iteration and innovation in this space, which is pretty new. So yeah, it's exciting.
Is this related to this piece of news? I saw this earlier today. Polymarket got CFTC approval, paving the way for seamless access through registered brokers and financial institutions, coming soon to a trading platform near you. Did you see this? Because this came out the same day.
Yeah, no, that's cool. Yeah, I mean, there's going to be a lot of competition in this space. I am guessing that what Robinhood, because of the volume that's already there, Robinhood, Polymarket, and Kalshi will form like a triopoly. And I know DraftKings is trying to get in now; they're way behind. FanDuel's. There's some other larger brokerages that are wanting to get involved in or are involved. But yeah, Robinhood, this fits their customer demographic, the stereotype that's out there anyway, to a T. And they just need to get this over to Canada ASAP so you can put your billions to work there for them.
Yeah, I need to stop using DraftKings, man. But that's interesting. So now, if all of these predictions markets have CFTC approval and can partner with trading platforms, do we expect more partnerships? Not necessarily with SoFi because it might go against their sort of mission, but I mean that's an ethical point. It's a strategic ethical point for SoFi to say, you know what, we don't want to do this. But from a regulatory hurdles perspective and a technical integration perspective, it seems way easier to do it now with CFTC approval.
Yeah, I would have to think a little bit more, but my initial thoughts on that is that those that are chomping at the bit to get in the predictions market already are partnering. So I think that they're going to fall in kind of a bit of an awkward window where those that want to get in already had to go another direction, and those that are reticent to get in or haven't figured out how they want to do that, that'll take them a while longer. So there's going to be a time period where maybe a lot of this is just like Robinhood and maybe a few other smaller people that use it. They can also do a lot of like specialization, like maybe. I mean, there a lot of platforms might want to say, "Hey, we don't want to do anything with sports related at all. It's too close to where we think that regulators would push back on." But they might specialize in certain kinds of activities and say, "Okay, so crypto related, we're good with. We can absolutely do something with that," or what have you. So, but yeah, I'm more excited initially because you don't rely on anyone to ramp this. What they do with it in house, either they've doubled their money just like that, or they will undercut the others and absolutely dominate the market. Probably both.
Yeah. Yeah. No, that's very exciting for Robinhood. Have you bought more Robinhood during this dip or no, not?
No, they're my number one position, so it's tough to buy that when they're overweight. I'm comfortable adding more, but it's got to be like when my positions are sized this way. So with Robinhood, with SoFi, and with PayPal as well, there has to be a very steep discount for me to add more, even though I think they're great companies and position well. The other thing with Robinhood too is like it's very cyclical, tied to the markets. It'll do well, and it's doing well right now, frankly. But when, not if, we go into a bear market, and even before then, when we go into crypto winter, not if, that's going to really hurt. It's not going to kill them or anything. I don't think they'll push year-over-year negatives or anything like that. But it's winter. Things are tough. A lot of the revenue does come still from crypto. And so you're going to probably see an overreaction in the share price. That's when, like if we see Robinhood trading at $60 and we're just going through a crypto winter, the world's not melting down, macro and bull market are intact, I'll add more there. Thank you very much. But that's like 50% off from here. So,
I mean, everything's going to be 50% off at that point. So that's what makes these drawdowns difficult, is that everything falls in conjunction.
Yeah. So yeah, Coinbase is the other one that I'm eyeing for the crypto winter too. They're doing a lot of very interesting things there. The engineering is impeccable. I just have too much crypto exposure, and winter is coming. So I'm like, well, I'll keep Bitmine. I'll keep Robinhood. SoFi is in crypto, but I don't really count SoFi or PayPal as far as crypto plays. But between those two, like that's a massive amount of my portfolio. So I can, I'll probably wait a little bit for wintertime.
Yeah, I agree with this comment. They're trying to find a way not to be so cyclical to essentially reduce their reliance on options and crypto. And at the end of the day, the betting market is just an option on everything.
Yeah, and what's interesting is like usually in like tougher macroeconomic times, you actually see an increase in degenerate gambling. So I don't love that, but I mean that's the reality of where we're at. So
I must be in tough economic times then, if that's the case. Okay. Okay. Let's move on to our next topic here. Roy, what are we talking about? Are we talking about some macro or what?
Yeah, macro, and then we can go right into NVIDIA, Google, and Meta right after that, I think.
NVIDIA, yeah, okay. I want to pull up a couple of posts here. One of them is the fact that, well, maybe I'll just pull up this post and we can walk through it. So there's a lot of stuff that's happening on the macro. And last week it was all doom and gloom because the world was coming to an end. And this week we got a relief rally. And the main thing that people are asking is this rally sustainable? Well, here you have Jesse, who basically aggregated a bunch of different points. You have quantitative tightening that's ending in about 2 weeks. You have rate cuts in about 2 weeks. The probabilities for rate cuts, I think, are like 70%, but we can take a look at the FedWatch tool. You got the war ending between Russia and Ukraine. Now, Washington Post reported today saying that Russia is unlikely to accept these terms. I think Trump is meeting with Putin, and he scheduled a meeting with Zelensky on November 27th, so on Thursday, which is Thanksgiving. You got the China trade deal reopening trade between the largest countries on earth. Funny enough, and you're going to start to see a theme here, is Trump is going to be signing this on the 27th on Thanksgiving. So you can tell where he stands with trying to wrap up all the world's problems by Thanksgiving and selling that as a massive, marketing thing. Crypto market structure bill passes. Obviously, that's going to be very beneficial for crypto in general, but especially for the companies that we're holding, BMNR and ETH. People get large tax refunds from the big beautiful bill and readjust their filings to increase their paychecks. The Fed and the Treasury to go in the other direction, performing quantitative easing through yield curve control. Earnings continue to accelerate. Jobs data starts to improve and continues for the remainder of 2026. Bessent was recently asked about this, and he basically said, look, we're just going to steamroll all the way through 2026. And it kind of makes strategic sense because you know what else is in 2026? Midterms.
Oh, yeah. Mm-hmm.
Yeah. So they're going to want to keep that momentum to try to push the market as high as they can. What's his face? Trump was also talking about circumventing Powell to essentially replace the Fed chair by the end of the year, or essentially render him powerless. And guess who they want to put as their new Fed chair? They want to put somebody way more dovish that's going to add way more rate cuts in order to pump the market. So I think that the catalysts are working out in such a way that the incentive structure is there for the markets to go back up. And yeah, I mean, World Cup as well, Babo.
Yeah, as long as consumers don't fall apart, and I don't think that they are. Black Friday is really going to be the best read for that. Although, there's a lot more to the month, and that's coming up very soon. Usually expectations, at least since post-COVID, have been pretty minimal and low. And every single year they smash them out of the park. Buy now, pay later, likewise, probably kicks a can further down the road. It opens up another credit box. And yeah, Jesse hit the nail on the head with a big, beautiful bill. They didn't adjust withholding through the year. So that's kind of a mini stimulus that a lot of people are getting. I have to look at the figure, but somewhere it's around like $370 on average, the higher returns versus last year because of that. So, and we've not even talked about the possibility of stimulus. Hopefully it doesn't happen because it is inflationary. But yeah, this is the biggest thing right here. So we see the rate cut probabilities have shifted immensely. A week ago, we were at a coin flip. A month ago, 91.7% of one cut. And then a few people were like two and a few people were like none. Now we're up to 84.3% with just a few in the minority saying that we're going to stand pat. Now, a big part of this reason for the shift is basically some of those reads that the Fed usually gets before they decide whether or not to cut for the Fed meeting weren't done simply because of the government shutdown. And so comments early on sounded like nothing was written in stone, that they could go either way. And so the market started pricing in that uncertainty. Sadly, at the same time as probably the market needed a bit of a breather. And, those sort of things are very healthy for a bull market, and they happen. But yeah, the added to extra pressure. There's also a crypto liquidation event as well that Tom Lee's talked a good bit about. All that around the same time as some companies mentioned consumer weakness. So the market's like, okay, we're going to go down I thought NVIDIA, and we're going to talk NVIDIA in a moment, with that beautiful, amazing earnings, because a lot of the narrative on the drawdown was, oh, it's because of AI and it's bubbly. And I mean, it's just not. We talked about that to death, though. And Jensen hit, he took the bear arguments head on and just destroyed them. Everything went up. NVIDIA was doing well. And then the market was like, oh, yeah, it's not actually really about AI. There's other reasons why it's going down. But rate cuts are a big piece of that. And one thing that I can credit Powell for, I'm not the biggest fan of the Fed, but he's been very careful to not surprise the market. And some of the ways that he's done that is his own comments, but oftentimes it's through Fed governors that are like, hey, guys, the market isn't really understanding what we're doing here. Fed governors will come out in a flurry and just report and say things like, yeah, it wouldn't be too surprising if we cut rates again, or it's looking like maybe we need to. It's something. And so they come out publicly. And then by the time we get to this meeting here in early December, the market knows what's going to happen. And that's a great thing for the market, because the market hates surprises, unless they're really good ones. But even then, it can be like, wait, but you weren't supposed to cut. Why are you doing it? The doom and gloom, the world is ending. So this is a big factor, something to keep an eye on. But yeah, between all those other all those other remarks, Black Friday is kind of the last piece of this. And I think assuming the strength that we've seen, we might see a little bit of chop, just because when there's a holiday like this, it's lower volume. And so the market can do weird things on lower volume. But as long as Black Friday is decent where they expect, or good, I think that we continue to go up. Santa Claus rally towards the end of the year is intact. We might not even have seen all-time highs yet.
That's very bullish. I do think that Powell largely has navigated well with the delayed data that they have, and Trump may say that he's acting too late, but at the same time, I think the incentives are a little bit perverse there, because Powell cares about the underlying health and longevity of the economy, and I think Trump cares a lot about how the markets look, because he uses it as a proxy to determine his own success. And the stimulus thing is it's like a perfect example, right? Like, okay, you did the hard thing. You cut out a lot of government spending. You started doing tariffs to collect more revenue. And great, you've been operating at a surplus on many months. Now you want to pay that out to people through a stimulus. Guess when they want to pay it, Roy? Summer of 2026. You know why? Midterms coming up. Exactly. It's like, dude, like it's political theater at the point. Like, I mean, Shane brought up the point here about inflation, and you're never going to get out of this debt spiral. And so I think that if Trump shoehorns in a more dovish Fed, then obviously that's going to be good for markets in the short term, but definitely not good for the economy, in the short term, because we're not seeing a lot of the indications that, oh my gosh, we need to cut, immediately. Like, earnings are still coming in at record numbers.
Yeah. I on the stimulus, by the way, I really hope we don't go there. I can't say it enough times. It's an unhealthy thing to kind of depend on that. And what I think will probably happen, because we've seen this historically. I know I probably talked a little bit too much about Rome, but through the Grendel, Panamint circuses, and also like the Praetorian Guard, which was the emperor's elite guard, they all got addicted and used to bribes around the time that an emperor became an emperor. And so what this meant is, in times, and I don't remember the name of the emperor, but there was an emperor along the way that was like, oh, why are we doing these bribes to the Praetorian Guards? That doesn't make sense. And then they murdered him. So it's like, well, that's why. Because if you don't give the people what they expect at that point, not want, not would desire, but expect and demand, you are in trouble. And so we might get into a political environment where, like, every 2 years, whoever is the ruling party is just handing out free gifts and goodies. And it creates a weird sugar rush that I think is really unhealthy for households and also for our country. Plus, we can't really afford it. Like, it'd be one thing if we have $40 trillion in cash or investments as the United States, but we have debt. So,
definitely. And like, it makes me more worried, because that paired with algorithmic trading just makes the market seem so crazy volatile, to the point where things that are supposed to be safe are also swinging like crazy, and it's just not a great, it's way more unstable of a and that's on both sides, right? Like the upside is higher, the downside is higher as well. But at the same time, you have the biggest company in the world, NVIDIA, growing like 60%. So it's like, what the fuck you want?
Yeah.
And so, okay. Do we want to jump into NVIDIA or what do we want to talk about next, Roy? Do we want to talk about Meta?
NVIDIA, Meta, and Google are all kind of interrelated there. So
Sure.
we'll do 3 sevens or the Mag 7.
Half of the hyperscalers. So Meta and Google basically did this deal, and NVIDIA fell 4% and Google rose 4% today. What did you think? Let me see if I can bring up the article. But what did you think of this deal at a high level?
I need to research more on the Tensor chips. I know they work really well as far as a mobile application. Of course, Amazon's been working on also a competitor type product, which have not really been well received. I don't know how serious Meta is really with this. It's not. I mean, in an ideal world, since I'm an NVIDIA investor, everybody just buys from NVIDIA and nobody else. But that's not realistic. There's going to be specialization. There already is. There's going to be competition. There already is. And different use cases as well. So I think NVIDIA is going to continue to dominate. But yeah, it's interesting to see Google's product move from internal usage, which is mostly what it's been, to a massive partner that does a lot of CapEx as well. So yeah, there's a bit of a drawdown with NVIDIA. NVIDIA is actually trading, or it was at the time, I'll have to pull up Fiscal AI here, cheaper on a price to earnings forward basis and also PEG ratio than Google based on this news, which is like, what are we doing?
Yeah.
So yeah, we'll have to see, like how meaningful it actually is, or if this is more optics in just a small bit of revenue, or maybe, but what were your takeaways with this?
I mean, it sounds as though the TPUs are really the only viable alternative for NVIDIA chips right now. It also speaks to the massive demand that it's so high that Meta is willing to rent from Google Cloud next year just to keep their models running. And like at the end of the day, this is for a deal that is beginning in 2027 that the market is already discounting, which is like a year and a bit away. It's just crazy that you were seeing negotiations for multi-billion-dollar deals for 2027 and beyond. And like that just speaks to the level of sustainable demand that makes me grin from ear to ear as a Nebius shareholder, It's it's bullish for the whole market, man. Like everybody knew that NVIDIA was not sustainably going to be the only game in town forever. I think even Meta is working on their own chips. They're all working on their own solution. They've begun testing their first set of in-house AI chips, MTIA chip. So like, and this was stuff that we've talked about, like even last year we were talking about this, that there's going to come a point where all of these big boys that have hundreds of billions of dollars in their war chests are not just going to sit around and be held at gunpoint to pay whatever NVIDIA wants to pay. At some point, they're going to work amongst each other. They're going to find out the competition. They're going to drive down the cost centers, and they're going to develop in-house to vertically integrate. That's just the playbook, right? That playbook was not developed for AI, but it can be applied in the AI race. It was applied in cloud. It was applied in everything. Like these guys are the best of the best in the world for a reason, because they can drive costs down and they can vertically integrate in a ruthless fashion. It's just a matter of time.
Yeah.
At the same time, I think NVIDIA is totally going to be fine, though. Like NVIDIA is not going to, for the fact that NVIDIA was down 4%, that sort of just proves my earlier point that this is ridiculous drawdowns, for NVIDIA to be down 4% off of this. And if anything, it should speak for this insane AI demand that will help NVIDIA. Maybe not with Meta, but it will definitely help NVIDIA.
So this is showing how ridiculous the move is, if you can pull this up, for both Google and also for NVIDIA. So this is just these two companies' price to earnings ratio, and I've included forward price to earnings. So we can see right here, this is the price to earnings ratio. This blue line down here is Google, and almost always it's traded underneath. Like if you got to go back to 2016 to see it meaningfully not. Of course, in pull downs or in drawdowns, rather, NVIDIA is more volatile than Google. So it oftentimes gets right into the same range. And we can see right here, Google is now trading on a price to earnings forward basis of 30.5. NVIDIA is 25.6.
Insane.
Now, the other crazy thing, Tevis, and we can look at, and actually, I think I'll do this. Let me pull up just NVIDIA here, and we'll do analysis. And, oh, that's not NVIDIA. Let's do estimates, because that's kind of the shocking thing here. So here are the estimates. If we go into 2026, and I can actually do it quarterly, but we can look at an annual basis. We'll do quarterly here. So there's a bit of a spread, of course, further out you get. It's not too surprising. We can look at revisions. It's been revised mostly upward, but there is something significant missing from all this revenue source. Do you know what that is? It's China.
Yeah. If they start selling to China, it's going to be way higher.
Their guidance, their revenue, everything is based on no China revenue. By the way, here are the revisions. It's that I really like fiscal AI in part just because of this, because you can see the trend over time as far as forward revisions and everything up and to the right. Not nearly as much as Google. We can pull up Google too if you want to take a look. But yeah, like it's for me showing how stupid the market can be sometimes with NVIDIA. NVIDIA might feel expensive because, yeah, it's the most expensive, barely company in the world. Apple might actually overtake it, by the way, if this polarity continues. But, man, colossal earnings. They're growing much faster than Google. They're going to be more cyclical, of course. So there is a little bit more risk. Like if you think Taiwan is going to be invaded on Thanksgiving, don't invest in NVIDIA. That would be really bad. Bad for everybody. But, I mean, like, by almost every measure, they're significantly cheaper than Google right now. So the market's being foolish. Like I think NVIDIA is one of the best companies in the world. I don't know that many people would disagree with that. And they're trading at a 25 times price earnings forward basis, assuming zero revenue out of China for 2026. What are we doing?
Yeah, man. If Apple at any point in time becomes valued more than NVIDIA, that's your screaming, pounding the table buy signal for NVIDIA. And the fact that Google, which was absolutely hated last year, is now valued at a higher forward PE than NVIDIA is crazy to me. Like the crazy realization that I have is you can make stupid amounts of money to buy whatever Mag 7 stock is out of favor and then just wait a year until they're the highest valued one and then cycle through to the next Mag 7 that's out of favor. And this applies to everyone except for Apple, because Apple is shit. But
yes,
but last year, if you'd bought Google, which is like everybody's like, fuck Google. If Google's going to zero, dude. If you'd bought Google and now Google's like one of the more overvalued ones, great. Sell that, buy Meta or buy NVIDIA. And, in 6 months, that's going to be way overvalued. Sell that, buy whichever one is, just as a swing trading the Mag 7s, because the emotional roller coaster is so incredibly volatile relative to the consistency of the execution of these underlying businesses that there is alpha every single time the market has a temper tantrum.
Yes. And by the way, like I don't think you're saying Google is overvalued, because it's not. It's probably fairly valued, and I wasn't in that trade at all. I was bearish on search only, and everything else I'm like, man, they're amazing. And I didn't understand that search is not going to deteriorate as fast as I expected. A lot of it is just because people, have been using, like SEOs have been using this ad-centric model for their much of their career, if not all of their career. So, yeah. But yeah. You don't own NVIDIA? Are you interested now that you see it trading at a 25 times?
Oh man. Okay, so I was actually looking at a trade, and I was gonna write. I shouldn't do this, but because I'm already in margin. But I was gonna write some cash secured puts either on Meta, but after seeing the drawdown on NVIDIA, I could also do it on NVIDIA, and that could be really interesting for me. So I don't even know if I want to talk about this on camera, but I could I was thinking about doing a potential maneuver with regards to some in the money cash secured puts on Nvidia for February or March at like 220. And because like I think at 170 it's just dumb, dude. And like it's gonna turn around, and but obviously that's risky for me to go like $50 in the money on puts. But
Hmm.
I mean it's Nvidia, right? Your break even is whatever the stock price is at today. Like it's all priced in, right?
Yeah, I'm tempted to do some leaps, Tevis. It's been a while since I've written any naked leaps, but I might do
That's an
that.
idea. Dude, you can have because there's such a big gap on Meta, you can have a massive spread in a leap trade. You can go like 650s, 850s, and you can capture $200 worth of gains for relatively, I mean, maybe a little bit different now because it's already gone up like $50 in the past like 3 days. But the point is, there's still a lot of upside because if Meta fills that gap, which by all accounts it will, it's just a matter of when, you can write for 2027 and you could be very, very good.
Yeah. Related to that, so let me pull up Bill Ackman.
Oh yeah, this guy. By the way, thank you 400 people for being here. Really appreciate your time. Drop a like if you haven't already. And yeah, just thanks for being here.
That's not it. There we go. There we go. Yeah, I was like, there's no way they have just two holdings. So this, I'm kind of curious. So we've talked a little bit about Meta, and I think a lot of people, including myself, I don't love Meta. The stock's great though, and it's really attractive. I'm curious: is Bill Ackman targeting Meta?
Yeah.
Is he maybe thinking about Nvidia? There's a possibility he's actually thinking about Palantir, or is it something like MasterCard or Visa, which are also pretty attractive as well.
All right.
So he basically
let me set up the stage. Let me share my screen here.
And while you're about to, real quick note, guys, and I did ask Tevis for permission on this. Fiscal AI is a sponsor. You guys might not be aware of it. It's the first spot for me. It's the first sponsor I've ever had. I've got a link. I actually don't have a link in the description. I'll add a link to the description while Tevis talks about this next point. They are doing a 30% off Black Friday sale. They only do 2 sales a year. So if you've been looking at this product, use my link. Get yourself a free trial of 2 weeks and save yourself some money. But yeah, that's what you're seeing me use here today. Like the tool. Take it away, Tevis.
All right. Yes. Get Fiscal AI and give Roy some money in the process. It's also a good tool. And if Fiscal wants to sponsor me, they can do that. Here's Bill Ackman, guys. So Bill Ackman was on Fox Business a few days ago. Let's just take a listen to what he had to say. I'm going to put it on 1.25 speed because I hate you all. Let's go.
It sounds like you're bullish going into the new year. Are you poised to put new money to work in equities going into 2026?
Yeah, look, I think it's been an interesting market. You've had some enormously successful companies who generated huge returns this year. You've had a lot of stocks that are down a ton. So I think it's a very good market for stock pickers. We're very concentrated investors, and we're seeing some very high quality businesses showing up at very attractive prices. And so we'll absolutely be putting money to work. We've actually got approaching 15% cash, and we're looking at a number of very interesting things.
So what would it take for you to put that 15% cash to work? A big sell-off?
No, just finishing our due diligence on a company we really have wanted to own for years, now available at a bargain price, something like that.
It sounds like you're...
So when I put it on 1.25x, I forgot how fast this motherfucker speaks.
It's like listening to a mitt. He talks on 1.5 speed anyway, so you don't need this.
So this is a post by Dimitri, and yes, may I meet you is obligatory. Bill Ackman, all-time quote. Dimitri here says, Bill Ackman was on Fox Business this week saying that very high-quality companies are showing up at very attractive levels after this drawdown. Pershing, which is his investment vehicle, is approaching 15% cash and is, quote, finishing due diligence on a company we've really wanted to own for years, now available at a bargain price. Now, the speculation is obviously, what is this mystery company? Because depending on what this company is, when that's announced, you're definitely going to see a little boost in the stock price, similar to how you had it with Buffett and UNH, right? When Buffett announced UNH, that thing like popped like crazy. Mm-hmm. There's a couple of different companies that he could be looking at. Dimitri in his post says that the company is potentially MasterCard. I said that, hey, look, this looks like Meta because Meta is far off of its highs. Roy also said it could be Palantir because that's trading really cheaply these days.
Well, so you can finish, but I want to respond to that because that's not right. That's not fair.
I'm just gonna throw up your post here around the Palantir. So let me share that, or do you have it?
No, yeah, I'm pulling it up.
It's okay. I have it here.
Okay, go ahead.
So Roy had this post, and basically, I think what you're saying, Roy, is that Ackman made a post here on Alex Karp's book on November 23rd, just 2 days ago, saying it was a pretty well written and fascinating read. And Roy, I'll let you take it away with the rest.
Therefore, it must be Palantir, right? No, well, so a couple of things. One, like if somebody's like newer in the market and was not investing during COVID, Bill Ackman is a loud investor. They're quiet investors that just like Warren Buffett, that they secret stocks and they don't want anybody to know, and some that are even more so on that extreme. And then there are some very loud ones. Usually those are hedge funds or those that are shorting just because they get help from sentiment. Ackman, though, I think he just loves to brag and boast and also talk and think as well. So this, if it's Palantir, and he posted on Palantir or Alex Karp also as well. So Ackman is aligned as far as the way that Alex Karp thinks and operates. A lot of the politics they have very much in common as well. He's aligned as far as his views in the United States and the rest of the world. He's aligned as far as his technology wave as well. And so if you look at that, if you blow that commitment to core investment principles, this is something that Ackman came up with, Pershing Square is his firm. Every single one of these, except for attractive valuation, which, you can't say that of Palantir. Everything else, like super high dense moat, formidable barriers to entry, ridiculous fortress balance sheet, market cap, you name it, like they dominate. So I think it's probably only like a 5% chance that it's Palantir, but there is a chance simply because he is loud. He sometimes front runs what he does. He did that in COVID, I think, very deliberately, but he's also done that with Herbalife and one other as well, way in the past. More likely is Meta first, and then maybe NVIDIA, although the timing of that, NVIDIA is trading at a much higher premium than it is right now. MasterCard, maybe. We'll see.
So yeah, this might be a funny thing if Ackman goes big on Palantir and Burry's big on shorting Palantir.
That'll be
then
fun.
It's some drama. But here, let me show you this, and then you guys collectively, the audience, can tell me if Palantir really fits into this portfolio. This is Ackman's portfolio, guys. So his number one stock, 20% of his portfolio is Uber. Then he has Brookfield, Howard Hughes Corp. Google is 10% of the portfolio. Restaurant Brands International, what's that, like Wendy's and Burger King? Amazon,
Wendy's.
Google again. So Google's what, 18, 19% of the portfolio? Chipotle, Hilton, Seaport, Hertz. And let me also show you what Ackman's been doing. This is his recent activity. He's just been trimming quite a bit. So he reduced Google by like 10% before the run-up. But he added it quite heavily in Q2. So I don't know what the F he is doing there. But yeah, basically he's been sitting on his hands a little bit on Q3, just trimming, and now they're up to 15% cash. But this is the big changes in his portfolio over the past year. They completely sold out of Canadian Pacific in Q2. They completely sold out of Nike in Q1, which they bought pretty heavily in 2024. They bought in Q2 2024 Nike, added, and then completely sold out. In 4 quarters, they were in and out. So definitely more actively managed fund, buying and selling intra-year. We'll see what happens, but there's no real guarantee that Ackman is going to hold any of these positions for longer than a year, just given how frequently he trades in and out of these positions. This is some of the prices of these positions. So yeah, I don't know necessarily if it's Palantir. It could be PayPal for all we know, right? Like
Probably not, but yeah, you can look at some of the companies in there. They're like, some of them are more conservative as well, but it's clear that he likes, well, maybe but he's 29%. This is Fiscal AI in service and computer programming, data processing, which is Palantir. So he might just be like, hey, I understand the space. I know what's happening here. We're going to go after this. And 20% service businesses related. So none of those are PayPal. Maybe he's like, hey, but I think Palantir actually has higher odds of him picking it up despite the valuation, because valuation is in the eye of the buyer. But yeah, it's probably only a 5% chance. PayPal, I'd say maybe like 1%. Warren Buffett, didn't buy it. So he bought Google instead.
Yeah. Andrew here says Ackman switched Nike from stock to options. I didn't know that. So maybe he's still in Nike. I'm not sure. But Nike's not
reported here. Yeah.
Nike shares were sold to buy Nike call options. True that he sold, but also misleading. So, okay, fair, guys. I don't know the whole history with Ackman and Nike, but
how could you not know the whole history of everything, Tevis? Come on.
That's freaking wild, bro. Because if we look at Nike, I don't know how those call options are doing unless he got leaps or whatever. Nike is well, this is on a weekly view. Each candle represents 1 week. So Ackman was buying it in 2024, basically. So buy. And then at some point down here in Q1 25, he sold it to buy calls. So I guess. So we'll see how that works out. But yeah.
That's tough. Yeah. I was actually kind of wondering, because of Nike, Lululemon. He obviously likes and doesn't mind distressed things that are trading well under valuation. Lulu has been trading, I know it doesn't feel like it this year, but has oftentimes traded at a pretty significant premium, and it is just beaten up and spit out. And he's obviously not opposed to holding something like that. I don't see, and I've not pulled up the original 13F Nike in his portfolio, so I don't know the weighting of that, because I'm only seeing equities here, or even if he has it. But Jesus, Lulu is kind of a similar play as Nike. So
this is a week view. So each candle is a week. Lulu has been on a straight shot up, peaked around Christmas 2023, and then just completely got decimated, fell 75%, since that time.
Yep.
Wow.
And I went in with a swing, and it went past my max loss threshold, so I cut it, and I'm glad I cut it.
That's very fair, sir. Yeah. So it's also really interesting to see other super investors and what they're buying. So this is a website called Dataroma, which you can see here, and you can see all the super investors. You can see what their top holdings are and their activity. Obviously, that's all public knowledge. This website just categorizes everything, which is really interesting to see. If there's some investors that you really hold in high regard, you can see what they're holding. Shall we move on to questions, Roy? What do you?
Let's do it. Yeah, Tevis is a super investor. Billionaire. He's got money. He's got looks. He's got brains. So, and then you got me.
Okay, sure. I'm not the one who invested in Palantir and Robinhood and in
If you did, you would own not only an island somewhere, you'd own Rhode Island. I mean, come on.
I would. I mean, you know what? God sometimes gives power to those that can handle it, and I would totally, completely be corrupted by it. So he's like, you know what? This guy, we're not doing that with him. So yeah, you are worthy, and there you go. Okay. let's go into our questions. Let's take a look. Are you more bullish on Google, Meta, or NVIDIA more? You have to pick one. Actually, I'm going to start that as a poll.
Yeah, NVIDIA easily. That's the only one of those that I own. Google, I do still think that there is going to be deterioration on the search model. It's going to take longer than I expected. and like the other half of that entire business has been on fire. So now the market realizes it. So it's fairly priced. So if in that ranking, it would be NVIDIA first, Meta second, but I hate Meta, so I won't own it, and then Google third, but bullish on all.
Would that change your, like, would a time frame change your, so NVIDIA regardless of time frame?
Yeah. I mean, obviously, if we're talking like the next day, momentum's a thing, but if we're looking at any time span, like a quarter out or further, NVIDIA, easily.
Wow, easily. That's interesting. I'm actually going to start this as a poll on Twitter so people can participate, because I think it's more nuanced than you make it out to be. You're also biased because NVIDIA is the only one you hold out of those three.
Well, it's because I'm the most bullish on it. Like if I was like, oh yeah, Google to the moon, man, not NVIDIA. NVIDIA stinks. What am I doing?
Yeah, no, that makes sense.
But no, like I think if you'll get some people that'll say Google because they may not be aware of the immense move that Google has made as far as stock price. Valuation does matter, and they're also probably not aware that NVIDIA is trading more cheaply by most measures than Google. I don't think many people know that at all. I had to look it up because I'm like, I know they were getting close. Like, are we actually at that point? And yeah, meaningfully, it's trading cheaper despite growing significantly faster and a lot of negativity priced in, kind of. I mean, we're still in the AI boom relative to that for NVIDIA. So,
wow, I like this. 3 months Meta, 6 months NVIDIA, long Google. Wow.
Long in NVIDIA. It's more cyclical, though. Google, like you wouldn't go wrong with Google. They're going to be around, 5, 10, 20, 30 years, probably, assuming no AI superintelligence destroys us all.
Well, I think the part of the thesis to defend Google is that they're just way more diversified, with Waymo and then the AI side of things, and obviously the search. It's just they have their hands in a lot of cookie jars, so to speak.
And Gemini is really good.
Brian says there's more long-term risk with NVIDIA over Google.
People have always said that. I mean, like for a decade plus, but Jensen, like it comes down to me, just leadership at that point and execution. Has Google done better, even outside of their CEO? Yes. They've improved meaningfully since 2023. But are you really saying that anybody compares to Jensen Huang? I think he's the best CEO on the planet, and I think it's a pretty wide gulf.
That's fair. Okay, let's move on to our next question.
Real quick, you were mentioning Google and Waymo. Like, NVIDIA is all over autonomous driving as well. So it's not all these different vectors. It's not like NVIDIA is just making GPUs that people use for gaming. There are so many applications. Data centers are not going away. They still will be cyclical more than Google, but man, there's an immense amount of things that they're in. If somebody is watching this and they've not paid attention to NVIDIA over the last few years, it's a meaningfully different company. Like Michael Burry, who it seems like he has bets against NVIDIA and Palantir as well. Well, maybe he's exited those already. We'll see. But with NVIDIA, his arguments made no sense at all. Jensen destroyed them. But a lot of it was him perceiving NVIDIA as the same company as it was back in 2018. And that's the thing about incredible companies with incredible leadership, is they can look dramatically different and better over a 2 or 3 year time span. And Jensen has done that time and time and time again. That's not the case with Google. Google is they're improving, they're growing, they're doing well. They're not at the same leadership quality or caliber. So, and yeah, I'll leave it at that. Sorry. NVIDIA is cheap. Why does this market not get it?
Yeah. John asks, what about me? Look, what I will say, man, I don't know if I want to stir this hornet's nest. What I'll say is that I don't think you can go wrong with any of them. Quite frankly, I think all are going to be fine. if and time frame, I think is very important. If I'm looking 12 months out, I think Meta, I can make a good case for 12 months out. If it's back to 780s, 800 range, if it reaches new all-time highs in the next 12 months, you're going to get a really great ROI there, because you essentially are buying from a lower base. I think with regards to NVIDIA, they're obviously going to continue to dominate. But as we've spoken about in this pod, is more competitors are going to enter the space. There's going to be more of a competition, but they are the true picks and shovels play. Like, everybody that wants to run on AI is going to, in one way, shape, or form, going to come to NVIDIA. Sure, there's going to be more people, but NVIDIA is not going to die there if you think AI is going to continue. And then I think with regards to Google, I mean, one fun little anecdote is I actually started paying for Gemini recently. And it's so freaking good, man. And I take back all the shit that I gave Matt money for Google. Well, I mean, I don't take it back at all, actually, because it was not great back then, and it's just good now. So good for them. But yeah, I kind of want to stop paying for Grok right now, and I only want to have Gemini. But I think I accidentally bought Grok on like a yearly subscription instead of monthly. So stuck on that. It's actually better than ChatGPT. Like, this is what I'm finding. This is just, I have ChatGPT, I have Gemini, and I have Grok. And Kelly, the Nano Banana generations that I've made, I really wanted to post them, but I think Sydney Sweeney would actually sue me. But it's very, very good. And I don't know, man. Like, I acknowledge the fact that, okay, next month it's going to be something new. I think Claude came out with their new thing, and like, people were stopping, Gemini, and this is why I argue the commoditization of LLM is going to be a real thing. But Google is definitely proving their staying power to some degree. Try it out. Let me know what you think. And I think the coding aspect is going to be really big here too. Like, the LLMs that can actually nail software development,
That's Claude.
I think are going to have it's Claude today.
Probably will be in the future too. Like, so the thing with LLMs, especially if they're specialized like that, you have two factors going for them. Beyond, like, I have no perception of like how talented their leadership is or their engineers or anything. I expect pretty solid. They have kind of first mover advantage in terms of that specialization. Everybody was like assuming Anthropic and Claude were kind of useless or dead, but they were just specializing. Developers and engineers use this a lot. Like, it's the must use. It's the go-to. It's the Chat GPT of the code stack. And then beyond that, you have all this data that's being collected and used, all these use cases, and you use that to continuously refine your model. And so it's kind of like with the HIMSS flywheel ecosystem, that the more people that come, the better your data gets, the better med match in their AI product is, the better the outcomes are, the more customers you can get as well. Virtuous cycle of a sort. So I would really be surprised. There may be others that enter in and are like really hyper specialized in that space, but that is Anthropic's market.
Yeah. TBD. Again, I think in this space, it is so vibrant that I don't think you can go wrong with any of the players, except if you hold Nebius, because that has been just not doing good recently. But I think Nebius is going to be back. Like, I'm confident in Nebius, and all of this is a validator of demand, and that helps ultimately my thesis with Nebius as well. So I'm really excited to continue holding that. There's actually some interesting news on Nebius. I don't know if you heard, Roy, or not, but around them having new data center locations that are now being like leaked.
I didn't hear that.
Yeah, so there's like one in Alabama and then one in Indiana for U.S. data centers for Nebius. And basically, the companies that's building these data centers is Data One, I think they're called, and they're now filing permits for new centers. And so the idea is that, like, hey, they already have built the New Jersey facility. They're going to be building these new ones, and nothing is officially announced as of yet. But that's very exciting because once those are announced, they can be operational within 12 months and start servicing that demand. New Jersey is already starting to service the Microsoft contract, and they were operational. The CEO of Data One, the company that's building out the data centers, was like, "Hey, we've been operational for weeks now."
Yeah, very cool. Yeah, no, and I agree. Like, I'm not Nebius. I entered in, was looking at it as a long-term position, sold like at 45. So it's about a doubling for me. Missed out on a lot of upside. Bought more Nvidia just because I'm like, I need less volatility in my portfolio, not more. But yeah, that trade is not dead. If it continues to bleed off, that this is, I think it went up today, right? It did go up today. But if it keeps falling all the way through the end of the year, I may be buying it again just because at some point, like, it's a really good, solid company. So it becomes too cheap.
Absolutely. Okay, let's continue with these questions. How did I deal with my SoFi $32 puts? That's a good question. I made a post on X about this. And basically what I did was, here, I'll share my screen. And this was what we talked about in After Hours, Roy. So I don't know if you had a chance to see this. I used the rally to roll out my $32 puts from November 28th. I was going to take assignment basically this Friday, which isn't even that bad, guys, because I got paid $3.50 to open those puts, making my break even $28.50. And SoFi right now is at $28.30. So I'm not even like at crazy losses after it recouped a lot of those back. But anyways, I did this yesterday as opposed to today, so I could have gotten way more money if I did this today. I bought to close at $5.70 for the 15 puts, and I sold to open the new ones after rolling at $7.20, netting $1.50 in a net credit, and I rolled them out to February 20th. And that way, I bought myself a whole bunch more time, and I got paid to do that basically. I also did the same for Nebius. I had December 5th at 115, and I rolled them out to Feb 20th, keeping the 115, and I got paid an extra $7.65 on them. The only reason I didn't take assignment, I'm not really scared about paper losses. The only reason I didn't take assignment is because I don't want to get early assigned on other things that I have in the money and then be in a margin situation. So if I was not in margin, I would have definitely taken assignment and just written covered calls, and I would have still made my money back. But and I probably would have had some gains as well because I'm high conviction on both of the names. Roy, what do you think about that move?
It makes sense for you, and yeah, avoiding margin, that's very good. And I know, like, there's no guarantees. Like, I think the market will continue to go up between now and then, but we don't know. So it could be that SoFi is trading at $16, and those are pretty painful, but it's relative to the rest of your position. It's small. Like, you can afford to lose a few million here or there. You're a billionaire. So
joke, man.
Yeah. But no, it's like, on a serious note, like, time is the biggest thing there. And I've done this before with Palantir when my covered calls were deeply underwater and I just needed more time. I wasn't ready to give up that position. This is on the other side of it, cash secured put. So, I mean, like, the other thing too is your risk tolerance is your own, and you have a lot higher appetite for risk than I do, and probably most people, frankly, in our audiences, because yours is extreme. For me, like, writing in the money cash secured puts is something I don't know that I will ever do. I've never done it before. I've thought about it briefly, and I'm like, no, that's too risky. So, but you're doing it, like, the thing I'll credit you for even more so is you're doing this. It's aggressive and it is risky on names that you love and you have a high conviction in. So, and I agree with you on both. Like, maybe things just fall off, and you're looking at $16 for SoFi. You're looking at like 35 on Nebius. So, like, those are terrible buys at those prices. But in 5 years' time, and you have time on your side, you're going to probably be green on those positions, even if the market, has a tantrum between now and then. So, yeah, I like it for you. You're doing the right thing, giving yourself more time, and not putting yourself on margin. So,
cool. Well, that's the answer to that. Have funds sitting in my Roth IRA. Need a few long-term stocks. Any recommendations? This is not financial advice. So you've come to the wrong show.
Yeah. Well, yeah, we
But
talked a lot about names earlier. So, I mean, like, look at NVIDIA. That's just, not giving you financial advice, but it's very attractive here.
yeah, just look at our poll, dude. Which are you more bullish on? NVIDIA's at 38%, Meta's at 35%, and Google is at 27%. So
Yeah.
I didn't say it. The poll did.
Yeah, you like most of the Mag 7. There are some that we're not as excited about. One, I see a question on there too, over the near term. Yeah. The Mag 7 are magnificent for a reason, mostly. So like any of those, if you're looking super long term, you might, one thing you might do is just look through those and be like, okay, what's going to be around and doing well in 10 years? Now, we don't know for sure what the world is like, but if you invest in impeccable companies with a significant moat and credible leadership, they're going to be around in 10 years. So, yeah.
Are you guys bullish on Tesla?
Long term, yes.
Still, yeah, you took the words right out of my mouth. Long term, yes. I think they're going to have a rough quarter, which is what we've talked about in the past, but I think they're going to be just fine.
Yeah. Yeah, it's my smallest position.
Expected stocks to get into S&P in December. Yeah, okay, cool. So SoFi?
No, I mean, there's a chance it's eligible. The problem is there's like 14 other companies that are
Like 11.
more eligible. You think 11? Well, yeah, we're looking at quite a few names. So we first don't know how many how much availability will be in there. We've seen a recent move, with the S&P 500 announcing. But yeah, this is a quarterly one. Once this year, they just said, you know what, we're good. We're going to stand pat. So I would guess 2, maybe 3 names. And so if you just give all those names equal weight, and I know I'm biased towards SoFi, the odds of SoFi getting in December are pretty low. If you say over from now through the end of the next year, yeah, SoFi is getting in. Like, I would be shocked if SoFi is in. The other factor too is S&P 500 is very obstinate and obdurate. And oftentimes when a company is not only eligible, but really, really worthy, they still are made to wait. We see that with Robinhood. We saw that with AppLovin, which I'm not a shareholder of, but they've been, eligible and excellent for a long time. The Trade Desk, I know they've been through some ups and downs, but they waited forever. Ferguson is one of those names that is, I think people have talked about it getting into the S&P 500 since 2022, maybe early 2023. Probably it's going to get in here in the next quarter or two. But there's a bunch of names like that. And so I would say, at least for myself, I'm going to make sure I don't have any covered calls going through that event just in case. But I think the odds are probably below 5% of it happening in December. What do you think?
I would tend to agree. I think March is more realistic, and if not March, then the one after that. But March is like what I'm hoping on. December is just, I'll take it happily, but I don't think, realistically speaking. Please. He admitted as much in our latest After Hours episode, which I have yet to post, but I will. And you will see he admitted this openly on camera. So it's not even. So Kelly says the recent FSD update ruined everything. Interesting. We'll have to keep an eye on that.
Yeah, I've not been on X much the last couple of days, so I'm kind of curious what other people are thinking too, because Tesla folks are very vocal on X, whether they're shareholders or whether they're just driving the vehicles, myself included. I've not used full self-driving. We didn't end up doing the long-term subscription, just a free trial. We have subscribed and paid on a monthly basis when we're doing a lot of driving, but yeah, that's not good.
Yeah, she says it's unusable, heartbreaking for leaves and bugs, pulls off the road randomly. Doesn't sound safe at all.
Yeah. Are you sure you didn't get the Temu version of full self-driving? Because that's what it sounds like to me.
Yeah. Full self-drifting?
Yeah.
Is SoFi also cyclical, Roy?
Of course, yeah. The weird thing, so like this was in the context of the Robinhood conversation. So back when I was a brand new Robinhood investor, I had what I called the golden confluence. And basically, if you look at interest rates, if you looked at the bull market being a thing and the crypto bull market being a thing, I called it the golden confluence, where all three of those catalysts lined up and would fuel the super cycle of Robinhood. This was when Robinhood was under $10 a share, and I was pounding the table, but obviously not hard enough because Devis didn't buy then. He is a Robinhood shareholder now. So there will be times on the opposite side of that too, when Robinhood, they're diversifying a lot, they're building out more things, but they're super cyclical. So oftentimes crypto winter and a bear market will hit at the same time as low interest rates as well, which is not death to Robinhood, but boy, it's going to be tough for that time. That's an opportunity to add, in my opinion. SoFi is cyclical, but they have different aspects of their business that are going to benefit in times when others are kind of down. So they'll never have a super cycle like Robinhood, where literally everything is lining up golden. But they'll also, on the flip side, never have something where everything is just bearish and going wrong. Like case in point, like interest rates high, great. They do well off base after that. Interest rates really low. They can do a lot of lending, a whole lot of lending, and their loans on their balance sheet look incredible. Things start hiking again, interest rates being higher and offering that brings on more customers. So that's just like one little thing there. So yeah, that's kind of what I like about SoFi, to be honest, is they don't have that super cyclicality. They're not, I see some Nubank questions. They're different, but they're like Nubank in that, for my opinion, for both of these companies, you can just buy and forget that these companies exist if you wanted to, and you're going to probably make good money. Not financial advice again, as an investor long term. That's at least how I view them. Robinhood, there's going to be times brutal and painful and awful as a shareholder, just because of the super cyclicality. But man, there's peak insane euphoria, and we're still in it, frankly, even though it's fallen quite a bit.
Yeah, so they're both going to be cyclical. SoFi is going to feel way less cyclical because they have the brokerage side of the business is a much, much smaller percentage of the total business. So what I would say to this is, like, they can very easily fix this in the next version update. And if it's bad for you, chances are it's bad for everybody. So the next version update will probably have something like this is very easy to fix from a software perspective. Okay, let's take a look. If you mention anything bad about New to Tanner, he will yell at you on stream. It sounds like Tanner.
As well he should. I mean, like, what's not to love? Nubank, by the way, hit an all-time high today. So, and it was one of those like left for dead positions for me at the beginning of the year. A lot of macro stuff at the same time as they were really ramping up depositories in Mexico. I can't remember exactly what that was that they were doing in Colombia. I don't think it was depositories, but they're basically the added costs at the same time as currency exchange rates between the Brazilian real and US dollar made things look terrible for Nubank. Although it's not. Like they are a killer company doing killer things. They're international, so there's some more geopolitical risk than investing in the United States, but I like them, and it's my only forward holding. So yeah, I love them.
Setting. I miss Tanner's rants. He should go to streaming at night again. Yeah. Just tell Tanner that you think AI is a bubble and watch him just blow the fuck up on you.
Yeah. AI is a bubble. You're wrong. NVIDIA is going to go down to 14. Just the more ridiculous you can make it. Don't like say 0, because nobody will believe that.
Yeah.
He'll get relevant.
What do you mean it's a bubble? Hold on. Let me pull up some charts.
Using physical AI, of course.
Roy, is your SoFi 2026 price target still intact? Is this a $60 one?
Was it $60?
Yes.
Yeah. So it is, but yeah, the timing of that was like basically at the all-time high. So, but yes. So the thing is with SoFi, as long as the consumers don't fall apart completely, which it kind of puts SoFi in an unknown position at that point, they'll still do fine. But I think the price target is going to continue to accumulate. They have like they have. I did a video a little while ago on like 6 catalysts that they have coming up next year. We talked about one of them today, which is entering the S&P 500, probably a next year thing. If it happens in December, we'll take it and we'll stomach that plus 5 or 10%, I guess, you know. And Tevis will enjoy not having his puts deep in the money anymore. So yeah, but really, I think unless we shift into bear market territory with a recession, maybe they don't get all the way to 60, but we're going to see a lot of improvement in price. And I still am going to stand by that price prediction. By the way, our 25s, you remember, I think you were right around 25 or 28 or something. Like it looked like SoFi is going to go right past it and just keep going. And like, man, our price target's going to look really bearish at the end of the year. And now it's like, well, we're actually like right in that range. So it's interesting how fast things can shift.
We do know a thing or two, I guess. Matt Money reposted that $25 for the end of year bet saying like, hey, it's going to be close. And I was like, God damn it. But I think I still have it. We'll see. If we have a Santa Claus rally, he's toast.
Oh, yeah.
Okay. Let's move on. Talk about VG, bro. When are we going to moon? When the lawsuits end. Wait.
Yeah, they're still in arbitration. Shell appealed. That's really the biggest overhang. It feels like, although the price can always get cheaper, that pretty much everything negative is already factored in. Nothing positive is as well. So probably when arbitration is finally wrapped up there fully, yeah, it's interesting. But yeah, as far as an actual company, like the way I look at VG is, well, we need energy. We absolutely need energy. And it's kind of a tough spot because nuclear is like the answer. There's multiple answers, but that's the best answer. Even with SMRs, though, as far as regulation, even though a lot of red tape has been cut, it just takes a long, long time from initial project and planning until you actually are delivering power. So solar has so much against it right now under this current administration. Commercial less so, but yeah, with rates and everything, it's tough. It's going to do fine, but LNG is really, I think, that ramp that is necessary, and it's the only energy source out there. I'm sure there's probably like exceptions in certain companies, but as far as an entire space, it's the only one where VG and its competitors are trading at, I think, a very cheap and very attractive price. So yeah, I think it's a discount if you're a long-term investor. If you're looking like over the next 12 months, I have no idea what's going to happen in price. If you look at, the next 12 years,
yeah. Eddie asks, how low can VG go? 0, Eddie. Technically, it can go to 0. That's like,
of course, it's not going to go to 0. I don't think it could go down much more, but I've been surprised in the past. But I'm newer in the company too, and also in the stock, and I'm still in the invest and investigate phase. So I don't know. I'm not really confident in that. I'm probably going to double my position here in the next week or two. It's still a very, like, I have 100 shares. Like it's so tiny. It's not even on the radar yet. Yeah. No, I bought when it broke under 8 and I'm like, oh man.
Oh,
like it's for me, like it's a no brainer.
Dude, what are we doing here?
Should I just buy some right now?
This is what you did last time. We looked at the chart and you bought last time.
Dude.
What are we doing here?
I don't know. It's kind of like NVIDIA, but like I think even more extreme. It's going to take the market longer to figure that out, though. But
they're also paying you 1 cent per share, and so BMNR is paying you a cent per share. BMNR is at $28. So if you want a dividend tax, you can.
I have 4 dividend stocks now, not 3. So okay, so where is my? It's in that. Okay.
Yeah, look, Roy is buying right now. You can see him focusing on the stock. He's there's a green screen, there's a confirmation, and congratulations, you hold more of this shitty stock.
I didn't have enough, so I'm gonna buy another 50 shares here too. Boom.
Wow.
All right.
Rolling in VG dividends for
I just added 100 shares more, so it's 200. It's not a big position for me. So I'm still very much investigating as I invest, but I've done enough and I've talked with enough folks that I need to start building it out We'll see.
Yeah, and your money's gone forever, Roy.
Yeah, and I just destroyed $692.
Yeah, exactly. Yeah.
Hmm.
Let's see. Let's see. All right. The stablecoins, tokenization, the Genius Act, and now the Clarity Act that's coming up. With so many pro crypto stuffs happening, do you believe there's going to be a crypto winter?
Yes,
Great
absolutely, 100%. The reason, so what's probably going to happen with Bitcoin, and a lot of crypto is not the only thing that goes through this. As commodities become more mature over time, or an asset becomes more mature over time, usually if they're cyclical, there's an elongation of that cycle at the same time as volatility is reduced over time. So they become basically more stable. That is likely, I mean, we've seen it so far with Bitcoin. That's likely the way it continues. Ethereum likewise. And they're very much tied together. Every single bull cycle, I was in crypto the last one before, like I was cognizant of it, but I was not like actively in crypto or anything. But every time before there's a winter, there's bulls out there that are saying this time it's different. Now, maybe at some point it is in the future, but yeah, even with institutions, even with regulatory clarity and all that being removed, ultimately this is a currency, and as a result, there is going to be some cyclicality.
Yeah. And for people who saying, I'm dumb, I don't understand, he's basically saying there's so many bullish things that are happening. Is the cyclicality like going to continue? I think Tom Lee did a.
I'm sorry. I was just saying the question's not dumb. It's a good question. It's a fair question. And I'd love to be wrong. Like if we just want to go up and to the right all the time with Bitcoin,
he's saying
great.
I'm dumb because
yeah. So yeah, sorry.
So here's the thing. I think Tom Lee did a good. He addressed this in a good way by looking at the 4-year cycles of Bitcoin. What I will say is I think that it's going to continue to be cyclical, but not necessarily in the same intervals that it's always had. With institutional flows that are coming in, we could see the cyclicality change in cryptocurrency. No longer a 4-year cycle that's based on halving, for example. It can be accelerated, decelerated, something in between, because you have this external force of massive volume coming in through institutional adoption. And what you're seeing right now, a lot is happening with regards to liquidity and just, players getting crunched and money flowing in and out. Like Tom Lee was saying, like, hey, there was basically a bug or a glitch in the system that led to massive liquidation. So you're going to have the cyclicality change as the asset class becomes more mature, but I still think their cyclicality will exist. So crypto winter is guaranteed. Whether a crypto winter is going to be in 26, 27, or tomorrow, I don't know. And then similar here from Christine, Matt Money thinks BMNR is going to be affected by crypto winter in Q1 or Q2 26. What to do with BMNR around this time? Look, I think crypto winter is going to be coming at some point. Yes, BMNR is going to be affected negatively. I think it's just a matter of when do you think crypto winter is going to be coming? Because if it's Q1, then sure, like BMNR is not going to be a good spot in 3 months. Although I would argue how much lower, can it go? You would have to see Ethereum drop way more down. And I mean, right now it's at 2,800. It's not like it's at 4,000 anymore, right? So when crypto winter does happen, Bitmine will be hurt, but it's a matter of when that happens. And I don't necessarily agree with the timelines that Matt laid out.
And the thing that sparks it differs each time too. A lot of times it is tied to recession, which I don't think that we'll have. Monetary supply can also be, monetary tightening cycles, but doesn't even have to. And there's been times in the past where it's not. So usually, there's several hallmarks of a typical bull cycle that are missing. And the biggest one and the most obvious one is there's not been a blow off the top rally at all. Of course, there's not been an altcoin run. I think you can argue and say maybe there isn't going to be an altcoin run or altcoin season. But yeah, the blow off the top rally is usually what you see shortly before crypto winter. So,
yeah. So that answers that question. Okay, let's thank you, Christine. This is the spicy one. What if Zuckerberg is in the Epstein files and has to step down, asking for a friend? Let's take the Epstein files out of them because I don't want to get like screwed by YouTube. Like, let's just say, what if an existential black swan event happens that any of these CEOs have to step down? First of all, I don't necessarily know that if that were to materialize, that Zuck would step down. But if there was, like, what is the key man risk? I think is the salient question here.
I mean, I think the reality is like there would be some people that would boycott, products, but Meta is it's tough. Like if you're using Instagram or Facebook or WhatsApp on a regular basis, what are the alternatives? They're not nearly as good. And Zuck is used to being hated, so I mean, he'd probably be like, "Yeah, it's fine. I can be hated." I doubt that he'd be in there, but maybe. And again, I don't really like him, although I respect him. So.
I mean, of all the people who would be in there, I don't know that because well, I mean, who knows?
Yeah, I mean, like, yeah, I guess I won't delve into like who's most likely to be there out of the max. No, I don't
we
want
should
to
make a bingo card. Oh man, yeah, maybe let's not make a bingo card. My intrusive thoughts. What happened to my HIMS position? It fell, Kelly. That's what happened. Yeah.
Yeah, that one's kind of it's becoming very attractive, Kelly. But it's a second half of next year play, maybe quarter two. A lot of that is GLP-1 headwinds. They went off the shortage list at 503B, wide-ranging exception, now on very limited 503A exception for compounding the GLP-1s. HIMS is a lot more than that, but a whole lot of their revenue ramp and insane growth rate was tied to that, which is no more. So year-over-year comps are going to be kind of tough. They've done some acquisitions, and it takes time to digest those and scale those. And then they've announced some new products and product lines, which are some of them are here and some of them are ramping, but it takes time to scale those out too. So I think HIMS is still a very solid bet. But if I was betting on it, and I have been, frankly, I reduced my position intentionally down to, it's probably about 4 or 5% of my portfolio. Just because I when it was trading in the 60s, I'm like, hey, this might be stuck in the mud for a year or so. Let me trim it according to the size of my conviction. I don't always do that, but I felt it was prudent here. And if HIMS continues to sell off and the market does not, it's just a HIMS thing, I will be a heavy buyer of HIMS. That might actually be my number one buy in the beginning of the year. If it's trading about $30 a share or a little bit higher, man. Even though I think it'll be dead money for, maybe like 4, 5, 6 months.
There you go, Kelly. You heard it from the smarter of the two of us.
Yeah, and not to like shill my own videos, but I have one that kind of breaks down the HIMS lab, what they launched. So if you've not taken time to research that, I recommend that you do your own research, of course, for anybody. But it's a short, pretty succinct video. I look at some of the competition out there. It's actually a more attractive space than my initial read into it when they announced a Tribe Labs acquisition. This is a further iteration of that. It's going to be a beautiful, amazing thing for the flywheel. So I'm very excited by that.
Yeah, I mean, look, I think the catalysts, like the landscape for HIMS looks a little bit different now than it did in the summer. I think the growth is more like skeptical now than it was in the summer. They have some aggressive targets if they don't want to lower their guidance. But most of all, the thing that I don't like and the thing that made me reduce my position, I still have it as a position, but it made me reduce my position, Kelly, and I think you should know this, is this point right here. Do you think management of HIMS are not being as transparent with shareholders and can't seem to address their core business this quarter while they did it last year, albeit in an ugly manner? I think management is a big question mark right now for me. Andrew's been doing some things that are not necessarily the best, trying to sort of pump the stock in the short term. They do have a little bit of turnover. The Nader Kabani news, he only lasted like 5 months, for example. The entire management team is completely new, and we have to wait to see what they prove out. They're all very effective people in their own fields. I know the head of product came from Robinhood, and you had other people like from Amazon and whatnot. They just need time to start working together. The CTO from Cruise, Mo. So Ilishwami, yeah. And so that's the point where I'm like, oh man, I need some more cycles to see this through. I really don't like how Durham is pumping in the short term. That's just not a great look for me, especially because he talks such a big game around like we want to be, this preventative healthcare provider in the long term and have access to more people and increase the TAM and then it's like, really, then you really care about what short sellers are doing today? I don't know. That's the main thing. But I think Labs is going to be very good. And I think Labs is going to actually be a virtuous cycle for them from a data perspective. That's going to help quite a bit. So it's a hold for me right now.
Yeah, and I agree with you there. Although I probably will start adding to it if it continues, the rest of the market goes up and it just stays where it's at. But and I agree with it, pretty much everything you said. The even like in the 10Q, they didn't break down the core revenue. They didn't have to. I think last time was the first time that they did, at least since I've been a shareholder. Yeah. I would have liked that to continue. I didn't really like also the Novo Nordisk that they alluded to. Hey, we're in talks with, which is a nothing. They've been defensive of the share price and share value. I think part of that is maybe due to insider sales, and I hated that about Andrew Dudum's most recent, or not, maybe not most recent now, insider sell that he was deliberately, it looked like, in my perception, pumping the stock so that he could get a higher premium for that known triggered event, which I do not like. Part of the reason why they wanted to be defensive with the stock is because they use stock to be able to make acquisitions. So if they are trading at $30 a share versus $60 a share, it's harder. It's quite a bit harder as well. So if we see a whole lot more where I see like deliberate obfuscation of what they're trying to do, I'll call it out and I'll probably be out. And it's tough because ultimately if I get to the point, and by the way, like I do like quite a few members of their C-suite. I do think Andrew Dudum is a very capable CEO. I'm not sure that I trust him fully. Yemi, the CFO, if he ever resigns or leaves, especially like right now, I'd be like, I'm done. Usually that's a bearish event anyway, or at least the market perceives it that way. But he is an incredible CFO and is just, for me, a lot of times in earnings calls, I'm like, oh man, this is not a great report or not as strong as I expected. And then Yemi comes in and he's not trying to hide anything. He's just very clear, transparent, sharing why this is the way it is, what they expect, and man.
Yeah, agreed. And I mean, like I see people asking like, oh, what price would we buy? And would we buy leaps? And I'm not necessarily bringing those questions up. I can if you guys want me to, but here Nick asked what price is undeniable. Like, I think at the end of the day, guys, if I believe in a company's prospects and in their management team and in their execution, I will buy them even when they're overvalued, because I know that they can grow into that valuation through consistent execution, and I have a level of trust. The inverse is also true. If I do not believe in a company's management and in their execution and in their forward projections, I'm not going to buy them even if they're undervalued, right? So at the end of the day, I really am looking, and of course, like I'll have small swing trades in between where I'll break these rules, but for long-term buy and hold positions, I really want to look at what the management team is that I'm investing my money in, and I want to look at what the prospects are. And I think for Hims right now, this is why it's at a hold. There's a lot of great things that I love about the company, but there's a lot of question marks that I have today that I didn't have in the summer. And even though it's way cheaper today than it was in the summer, I'm still not adding to my position. In fact, I've trimmed a lot of my position because of those questions. Once those questions are alleviated, I'm happy to buy Hims at $50 or $60, double what it is today. But I know that I have clarity and peace of mind.
Yep, ditto. Great way to put it.
Cool. Do you like Salesforce, Roy?
No.
Okay, great. Next question.
Do you want me to go on a rant or? A little
No,
bit more.
we have like 8 questions. And
Tiny bit more leadership, and nobody loves the product.
You don't like Benioff?
No. He's acting crazy.
He's always been crazy, bro.
Crazier. Like, he's acting like, if you asked me this question a year ago, I would have been like, they're fine. I would never invest in them. Yeah, Steve loves CRM. They, the way, so one other little thing, working on a PhD, hopefully defending this next spring. I got a lot of writing to do this weekend and also over the next week. The methodology of my dissertation is rhetorical analysis. And so it's some overlap, not complete overlap, where you can look and analyze the way people are speaking. You can even, although this is not what I'm using it for my dissertation, look at body language, because again, that's part of communication. So you look at the communication style and you can draw a lot of conclusions from that. So with Benioff, he has, I mean, look at all the different headlines and stuff that he's been involved in the last 3 months, and some of those big choice quotes that catch the newsways. He is portraying himself as somebody that is almost desperate at this point, which tells me that the disruption and the deterioration of Salesforce and their model runs much more deeply than the market appreciated. And I even appreciated it at the beginning of this year.
Interesting. I have no opinions on Salesforce. Do you have any thoughts on Micron? I think
so. I said I needed to start looking at them, and I've not. But they are benefiting from the AI rush. Same with the hard drive space as well. Micron is of course, on the RAM, the DRAM specifically, like that is being used heavily with a lot of AI chipsets. I see a question later on small cap tech. Remind me that there's some pullover to Micron. It's not small cap, but so they're in a really good space. It's a strong company that benefits from the AI rush. So it's a picks and shovels play still there. Kind of wish I had done sped up my investigation there, or at least invested. I just didn't. It's trading. I like to have at least 100 shares, and I'm like, okay, do I really want to put? I think at the time it's trading at like 120. It's like, do I really want to put that kind of money on a play that I've not done much investigating? No. VG, it's easy because it's 100 shares is nothing.
100 shares is nothing. I mean, it's something for somebody.
Yeah. Well, I'm just saying for where my portfolio is versus 100 shares of Micron would be a pretty decent stake in a company I had not taken a good enough look at. So.
Okay. Who is already staking successfully? SBET. SharpLink Gaming is doing it successfully right now.
Everybody except for BMNR.
Yeah, exactly. Are you buying BMNR now that it's up all the way up to $28?
I bought a good chunk last week because I'm like, this is stupid. Also Ethereum. And I bought a little bit more. It's actually yesterday before the big run up. Kind of, I guess, during it. It was like up 5 or 6%. But yeah, not a meaningful amount on Monday.
I also bought some on Monday, not a meaningful amount. I'm overexposed, I think, to BMNR right now. So I'm not going to be buying more. And if anything, I might be writing against the part of my position on the way back up. I'm not writing just yet, but if we go to 35 or so, I'm going to start writing again on it, just to right size it. How low do you think BMNR would go? Depends on how low Ethereum goes, I guess.
Yeah, I think that's probably tied to the. So actually, let me throw this up. This will be maybe more illustrative.
Mm-hmm.
This is before.
By the way, Blake, we did talk about BMNR. It's at the beginning of this video. We started with BMNR
for like 25 minutes. Yeah. So this is not BMNR. This is MicroStrategy, MSTR. Or just strategy now. Man, I'm never going to get used to that. If you look at their NAV, there was a time when they traded under. This was during the previous crypto winter. where you could buy it basically for less than what the Bitcoin was on the balance sheet. They went down to 0.72. I think they actually went just a touch lower, but I remember it being around like 70% of the valuation. Now you can see this is actually trading under the MNAV as well, 0.95. Keep an eye on that. I would be surprised because I see, even though there's a lot of differences, Bitmine is, in my mind, and I think the market and institutions are perceiving it this way as well, in the same light as Strategy. What this means is I think that probably if we go through a crypto winter, we're going to be trading under MNAV for sure. And I wouldn't be surprised if we go down to about 70% of their net asset valuation. So whatever that is, as far as Bitmine, that's where we're at. So this would be, let's see, 20, 22, 23 a share. That can change, dilution and everything changes a lot of it. But like, if you were to ask me like today, right now, based on where they're at, probably not any below that. And that would be for me, like something I'd be keeping an eye on, but that would be a signal to like, okay, maybe this is the time to get aggressive here.
That makes sense. Hold on, let me pull up the next question. I'm literally on Uber Eats right now ordering a burrito.
I like it when I make you think a little bit too, where you're like, oh, I didn't think of it that way. So
yeah.
Or maybe you're just thinking about your burrito.
I was thinking about the burritos. Sorry.
There you go.
So great, we answered that. Either of you own small cap tech?
I'll let you go first because you might have a shorter answer, and then I'll go longer and you can finish ordering your burrito.
What's small cap?
People are, like, I don't know what the line is actually. So under $1 billion for sure is, but
it's under $1 billion.
I think. Let's see. You want to ask Gemini, and I'll ask ChatGPT, and we'll do the average. What is a small cap in terms of market cap? I think 10 billion is.
No, that's like micro. I think 10 billion would be smart.
Yeah, this is saying small cap is under 2 billion, but that definition, inflation is partly to blame in this. I don't think anybody is like, oh, if it's 2.1, it's mid cap. What does Gemini say, or did it say anything?
Yes, it says
2 billion.
Up to 2 billion. I don't believe this. But
I would say anything under $1 billion is a micro cap, and probably above 1 to maybe 5, 7, 10, even 10 would be, small, considered small by most people. But yeah, air test systems for me. And I'll talk a little bit about that because it does relate to Micron and NVIDIA and also Google. Do you have any, Tevis, that are maybe 5 billion or under?
5 billion or under, I do. Well, the smallest company I have is Next, which is 1.5 billion. And then I don't really have anything other than Lemonade and then Hims, and it just goes up from there. You can say your thing while I.
Yeah, so AEHR, Air Test Systems, is the one that I've talked about some. It's one where it's probably not going to. Well, they will. I guess a couple of steps. One is they basically provide test systems, and they have been around since 1970 something at the wafer level for multiple different types of mediums. So whether you're looking at silicon photonics, silicon carbide, or gallium nitride, which is all the rage right now, and all have different sort of use cases, they're able to test that at the packaged parts level or at the whole wafer level, rather than like cutting out the die cores and testing individual CPUs, which is way less, or GPUs that are way, way less efficient. You can test these longer and have longer burn-in times. And as a result, like, people buy their whole test system, their equipment, and there is some residual revenue in terms of die packs. And one other that my brain is it's not in there right now, but as CPUs change and evolve, you can kind of think of it like printer cartridges. Not the same thing, but it's a useful analogy. I really like them because they're a picks and shovels play that is a micro cap that is going to benefit basically no matter who wins the AI arms race. They also do tests and testing systems on, like, for instance, hard drives, which if you look at, like, SanDisk is the most recent inducting S&P 500. Look at what they've been doing. Look at Western Digital. I don't know if Seagate is publicly traded, but whoever owns Seagate, I'm sure they're doing amazing things too. They also provide testing systems, and they have partnerships with some of the largest that do this for RAM. So the DRAM push and wave, not only can they help Micron and many others out, and they likely have, they have to not like reveal publicly their partnerships, but they say customer F and that sort of thing. Normal in the space, just because the competition, a company doesn't want to give the competition an edge and say, hey, the reason why we're destroying you guys is we partnered with these other guys. But yeah, so they benefit from so much of what's happening in the arms race. It's incredibly lumpy revenue, but I think that they're very differentiated in their strategy, and especially what they're able to do with gallium nitride. So I think they're positioned incredibly well, but there's a lot more risk on a company that size that's under $1 billion valuation. It's about 5% of my portfolio. If it keeps bleeding, actually, if we see it fall under $20 and it falls down to like $16 a share, I'll probably double that at that point, just because it's hard for me to see like much risk there, honestly, at that valuation. It can always go down lower. It has recently, but yeah.
Dude, these guys are offering crushed chips for your burrito, which is freaking wild. I freaking love capitalism, bro. I can do crushed chips in my burrito. Fuck yeah.
That is a type of chips that Air Test Systems does not test, is crushed chips. So
yeah, exactly. Not GPUs, not TPUs, CPUs. All right. Hold on. Let me get back to. Do you guys like Uber? Dude, Uber Eats charges up the ass. So no, I'm bearish on Uber Eats, even though I'm ordering from it right now. So
I think maybe he's asking about the stock, and it's interesting because it was selling off. I don't know where it's at right now, but if you look at it, I don't think I'll ever invest in Uber. I think it'll be like Amazon, where I see it as an attractive company that's positioned well and maybe a bit undervalued, but there's always more screaming buys that are out there. So.
Yes. I mean, if you ask Bill Ackman if we ever have him on the show, then we can ask him about Uber. Hold on, let me order this first.
When we have Ackman on the show, not if.
When we have him on the show, we can ask him about Uber. And okay, my order has been put in. So I now have a timeline that I'm working towards. So I think I can only do this for like 30 more minutes, but I think we should be done within 30 minutes.
Yeah, there's two different types of streamers. There's streamers that order food while they're streaming, and there's streamers that buy stocks while they're streaming. I mean,
all right, you guys want to hear the funniest thing? So I want to bring somebody on as an editor, and so I'm like talking to a few people to say, okay, like, this is what the role is, and you're going to help me turn long form content to the short form content. And as part of just taking a look at their technical ability to turn long form into shorts, I was like, hey, join the live stream and do the timestamps, and then pick a segment off of this long form to make it into a short. And what I didn't realize is that this is one of our longer episodes. It's over 2 hours, and this poor guy is like doing the timestamps for this, and I feel bad. I'll have to order him an Uber Eats or something. So I mean, yeah, we'll see what clip he picks for the short. That's gonna be fun. Okay, let's just wrap up with the questions here. Roy, how do you feel about that?
Yeah, rapid fire.
All right. Thank you for BMNR content. Have I ever heard of DeFi Technologies, DEFT? Nope. Next question. Do you think Google announced what Google announced with Gemini 3 being trained through Google TPUs rather than NVIDIA chips is a long-term concern, as 60% of their customers are hyperscalers relying less on NVIDIA. So we did talk about this. And we did talk about this. And I think NVIDIA is going to be just fine.
Yeah, same.
Yeah.
Good for Google, though.
Good for Google. Yeah. How is Nemesis a boss? Fuck off. He says, "Don't feel bad because editing is fun," but I won't throw that up on the screen. You guys will just have to trust me that that's what he said. Can you talk about Duel and Adobe? That's interesting. I want to average Duolingo, quite frankly. I don't really want to buy Adobe, and I think we've talked about that one in the past around the pros and cons. But I want to average down on Duolingo.
Yeah, I mean, so let me pull up Duolingo and Adobe too. And what measure do we? Let's do forward price earnings again, and I'll throw this up here so we can take a look. Now, by the way, I think an investment thesis needs a whole lot more than valuation, but you can start somewhere. Valuation is not the worst way to do it. If you find something attractive, then look at the underlying business, look through, do your due diligence, develop your own conviction. I mean, Adobe has been priced, used to be like any other SaaS, and now it's just deteriorated to the point where its PE is, and I probably shouldn't have compared to this because Duolingo has not been profitable that long, so it looks kind of lumpier. But yeah, it's priced pretty low. It's still growing. I don't think AI is going well. So these are kind of tied together because there's a perception for both, and that's why you've seen this ratio just continue to fall, that AI will completely disrupt them. I don't find either case credible. I think there's more disruption on Adobe's line, and of course that failed Figma acquisition. It certainly hurts them as well. Figma reported their first earnings fairly recently too, and it's actually trading, or at least was at the time of they're not top of my radar, but they were trading under their IPO price, and I
Figma. Yeah, Figma.
But yeah, so these ones, like I'd probably prefer, if I had to pick between these two, to invest in Duolingo. I did have a small, tiny position, invest in Investigate. I'm like, there's other things that I have a clear conviction in. There's a few things I don't like with Duolingo, but I think that they're pivoting to a learning platform. It's in a bit of a transition, so we'll have to see how that plays out. Adobe, it's being kind of left for dead. I don't think that they are, but it can still get cheaper over time, and I think it might take a long time for the market to understand that.
Yeah. I also think this, though. Duolingo is going to be a victim of tax loss harvesting. Absolutely, because it's down already, and down can go more down. But at the same time, like, I really like what Duolingo is doing, man. I like the approach that they're taking. I like that, they're expanding outside of just languages into more courses. Adobe, I just don't freaking like. I don't like because they have this like walled garden type of approach that you need to be in their ecosystem. I deal with Adobe every single day. Every day. Not necessarily, I'm not an artist. I don't, but like I'm the person who's approving the budget, and I know how much they're charging us, and I freaking hate it. And all of my artists are like, "We need it, Tev," and I'm like, I can't do anything about it.
So let me ask you, Adobe or CRM that we talked about earlier, if you had to invest in one of those two for 5 years, which would you do?
I don't know anything about either of them, man. Like I know what their products are, but I don't know anything about the business and the prospects. But it's a good question. Well, CRM also owns Slack. I don't know. I'm leaning towards CRM, quite frankly, because like the way I see it is that the total addressable market for CRM is bigger, where all businesses essentially need Salesforce's services if they get big enough to handle leads, to handle their sales pipeline, whatever the case may be. And for Adobe, that's the same thing, but I think the total addressable market is potentially smaller and more prone to disrupted by AI. So I would lean CRM in that case. Yeah. Slack is great. CRM sucks. Yeah, that's fair.
True.
Adobe has a huge presence outside the US. Dual uses AI themselves, so there's no way AI is better than Dual plus AI. It's fair. Adobe's just another PayPal. Ackman's buying Adobe. Dual is going to, yeah, I read this. Okay, cool. Let's go into good question though on Dual versus Adobe. Two seemingly value traps? Question mark. Are there companies you're waiting to get in on? If so, which ones?
Oops. Yeah, I have a list, the futures list. I know you guys can't read that, but it's just 5 names.
Wait, ABCL. Hold on, ABCL. Just focus it one more time. There you go. Leave it there. Nebius. Rocket Lab is the last one.
Yeah,
Rocket
that's terrible. That yeah, it keeps focusing on my face, which is great. But yeah, Accelera, I owned in the past, and while things were falling in April, I'm like, I'd rather just own more PayPal. Obviously, that's not worked out. I really like it. I would need to. I still pay attention to them, and what they're doing is more of a long-term thing. But I'm interested, and I would like to have a little piece of biotech, and I actually understand what they're building there somewhat. Coinbase, next crypto winner. I'll probably buy Coinbase. Cloudflare, that's NET. It's always priced at an extreme premium, but man, they have such a deep moat. I love Matthew Prince as a CEO. I think they're so intelligent and smart. I also like largely what they do. And it frustrates me to no end when they have like an outage, a big Cloudflare outage, and the stock doesn't fall much. And I'm like, fall, why won't you cooperate? It's like 197. Like, and then Nebius is one, and then Rocket Lab. So valuation gets right on either of those two, I will get back in. Well, for Rocket Lab, I just missed it. It was my own fault. I was investigating without investing first. It ran. I was like, well, I'll get it on a pullback. That was at $7.
That's fair. Yeah.
What about you?
I don't know, man. I think like Amazon's not really expensive right now, but I would definitely love to get Amazon cheaper. Meta is one that I want to sink my teeth in so badly because it is pulling back or has pulled back. And other than that, I don't know. I think Tesla's kind of overvalued. I would definitely buy Tesla on a pullback.
Yeah, I would same. Yeah, but we're already in it, so
I really own everything that I really want to own right now. But what percentage of portfolio is in Next? Let me check for you real quick. It's about just under 3%, which is kind of crazy. Like I'm definitely overexposed to Next. I want to get rid of some of it and like just pare it down a little bit, or maybe this is the other thing that I've been thinking is get rid of it altogether and just go that exact same weight into VG.
Yes, join me.
Well, because they have real revenues and like they have a lawsuit risk, whatever. It's a different thesis, different expectations, but I think the real revenues makes me sleep, I think, a little bit easier at night.
And it's I think easier. I've looked, at some other energy space companies, and I'm like, like Enphase is the biggest one, but also a lot of solar too. And I'm like, I think there's a time to get into that, and it doesn't feel like it's yet. It may be close to midterms, maybe, but even then, like I think it's going to be maybe several years of dead money.
Yeah. All right. My burrito is going to be here in 10 minutes, so that's all the time you fuckers have with us, unfortunately. Google is only guiding 22% growth. Why should I be bullish on it at 35 PE? Tom asks.
Well, forward PE is better. Look a year out, see what they're expected to grow at, and it's closer to 30. 30 is not ridiculous at all. Like I think it's a fair value range, but it's more of like your investment philosophy and why you're investing and why you'd invest in Google. I personally wouldn't invest in Google for like massive capital appreciation. I think it'll outperform the S&P 500 though. And so if I wanted a good stable stock, and Google is, of a company that is not going to be disrupted, they'll be positioned very well a decade from now, it's a really easy buy. Just really is. Same with Amazon. Same with pretty much everybody but Tesla and Apple.
Yeah, exactly. I don't think you can go wrong with the last thing Roy said. Buying anything except for Tesla, like all the Mag 7s except for Tesla and Apple. I think even Tesla, honestly, it's just overvalued a little bit.
I think so.
Just not Apple. Just don't buy Apple.
Dude, Apple's about to become the largest market cap company again. It's like, okay, market, quit being stupid with NVIDIA and do what you want with Apple. I don't care about it, but quit being weird.
Yeah, man. It sucks for your iPhone.
Google actually, like if you look at the market cap, there is a scenario where we can see Google as the most valuable company in the world instead of the other two, which is
I did post, and my computer's lagging, I think, because it's also updating my Uber Eats order and doing a million other things. But I posted this, and I want to get your thoughts on it. I don't know if you saw it or not. Let's take a look. I said, do you guys still think Google is undervalued? Because Google is now worth more than Amazon and Tesla combined. If I said that last year, you guys would be like, what?
Yeah, it's crazy.
Yeah. You take Amazon. If Amazon and Tesla merged, basically, it would be what Google is worth right now. Which would you buy? Amazon, Tesla, conglomerate, or Google? Because I know which I'd
Amazon, Tesla, probably.
Yeah, same here.
So Amazon's not being disrupted, so you get that. And then you get Tesla with a lot of upside from Optimus.
We're getting a lot of milk gang in the chats. Probably Steve sent us a bunch of viewers. I don't know, or a Tanner. What's this you're sharing, Roy? Let me throw it up.
It's pretty much the same thing, just a little easier to see because of the colors with physical AI. But like you can see how close this is market cap of all three of these companies. So Apple is purple, Google is orange, and NVIDIA is blue in this. And like NVIDIA has not been the largest by market cap publicly traded company for long. That's been Apple like a long time. You know what it's never been? Well, no, actually, Google was very briefly here. Well, I don't know if it's the largest, so I'd have to pull in the other Mag 7, but no, that's NVIDIA. Sorry. Google has literally never been the largest weighted market cap company ever. And I mean, you can look at it. It's on quite a roll. Momentum can last a while. So yeah, if I had to pick like these, like to outperform over the next month, I would probably say Google just because momentum is a real thing over the short term. But yeah, so out of these, Tevis, a year out from now, which of these three is the highest market cap company in the world? And if you have another one where you think it might be Google, you think so?
No, which one am I looking at? Google, Amazon, and Tesla?
No, you're looking at Google, you're looking at Apple, and you're looking at NVIDIA. So NVIDIA is number one, Apple's number two, Google's number three, but all are really close, right around $4 trillion market caps.
It's definitely not Apple.
Hopefully not. Bear market, it could be again, honestly.
Well, you know what? No. I'll make a case for Apple. Yeah, I'll defend Apple. Why not? Here's how it could end up being Apple. Hold on, let me throw this down for a sec.
Yeah.
Here's how it could end up being Apple. Tim Cook is out in 26, which is the plan. A young new hotshot comes in, which is not the plan. They plan to promote their VP of like hardware engineering or some shit. But let's say that's scrapped. Let's say a young new hotshot, Steve Jobs 2.0, whatever, comes in, shakes up everything. They go after an acquisition, which is definitely not Apple's MO. If that happens, sentiment can change on a drop of a dime, dude. Because Apple still has the best ecosystem for distribution of their AI, which is the iPhone, right? The iPhone has all of the personalized information about you and can use that to hyper-personalize an AI assistant for you right in your pocket. Apple just doesn't know the value of the cards that they hold because they're run by an operations manager, basically. And the operations manager mindset is like, hey, let's cut costs, let's increase profitability, let's tinker on the factory line to make incremental improvements. And what Apple needs is a maverick to say, fuck this, we're scrapping this entire division, we're going after that big acquisition, we're taking big bets. That's what they need.
Yeah, I don't see that happening, but no, that's a scenario that if it happened, yeah, number one is Apple.
Yeah. I think barring that, I think NVIDIA has a pretty good shot, but a lot is priced into NVIDIA and they have very tough comparable periods.
We've been saying that for a couple of years. So yeah, so so you think NVIDIA is number one, but it's going to be close?
Oh man, I think it's sure, let's go with that. I think NVIDIA is going to be number one. I think Google has climbed quite a bit. Let me throw up your chart again. I think Google has climbed quite a bit, and I think it's gonna. I think NVIDIA is going to reclaim the top spot.
Yeah,
let's put it that way.
Okay, I'm hoping just because it makes for a fun thing, even though I'm not in Google, that Google overtakes it just briefly. Give them a moment in the sun and enjoy.
This is their moment in the sun, bro.
Maybe.
All right, T-minus 5 minutes on the burrito, guys. So we're gonna get through these questions. And no, you're not gonna get to watch me eat the burrito on stream, unfortunately. I'm not gonna do that to this poor editor guy, man. It's his first day. Do you think PayPal will have PayPal question? We're gonna meet all day. Do you think PayPal will have a third transition year after what he said last week? It sounded very bearish to me, and it looks like the thesis will take longer.
I didn't like the fireside chat at all. I posted on NetMX. Even companies that I hold, if I see something bearish, I call it out. It's not really a full transition year. I did say that, but probably it's a little bit unfair or disingenuous. Everything at PayPal tends to take longer than it should, and that's not good.
Yeah, and it's a little bit less shocking the world than they'd like it to be.
It's making the world yawn. They're doing some great things, which I think will be successes long term. I am not too confident on how they're going to guide in Q4 down. It's going to be conservative, but like it may be to the point where they don't even talk about new innovations. It should be a colossal mistake. PayPal is trading at a ridiculous valuation, but cheap can get cheaper, and that can continue for a while.
So, Roy, let me ask you this. What attracts you to PayPal over Shift4? Slower growth, similar valuation?
I don't actually think it's similar valuation. It kind of is. Look at how Shift4 is growing. A lot of it comes from mergers and acquisitions. Now, that can be a part of your model. It can be for a long time, and you can be successful with it. Where Shift4 is currently at, I think mergers and acquisitions slow down some, and the growth rate does as well. That's what the market is implying. Payments is not a fun space for anybody right now, really. I also think so. Shift4, a lot of what they do is just payments processing, and I don't like that. Even if you're the best of the best, that is just a pure commodity. That's one aspect of what PayPal does, but there are a whole lot more. They're a double-sided network. They have an immense amount of data that they're just beginning to leverage across the board, from advertisements, Fastlane, that guest checkout, PayPal World as well. That size and scale and global reach really positions them, I think, very well across the global infrastructure, to the point where you'll see more and more names. You've already seen massive names join PayPal World, which formally launches early next year, but it's already active. They're already doing transactions with it. Advertising just seems like an easy layup. These are things that Shift4 can't do. They're just not that type of business as well. I think Alex Chris is a very good CEO. There's some areas that he's weaker on that he needs to improve on, but yeah, there's probably more reward for Shift4 potentially, but there's also a lot more risk. For PayPal, I think the only real risk there is opportunity cost. It's a real risk. We shouldn't understate it. But yeah.
I'm putting you on a timer. Because once the PayPal chat starts, you're on timer. Thank you for being here, two brothers. I'm putting this down. T-minus 2 minutes for the burrito. Okay, let's go. Travis, you are in Canada. Why aren't you invested in VG? Why not Canada natural gas player? Because I like making money, and this is just the players that I want to be in. I don't know how else.
Why would you invest in Canada unless you had to? Although Accelera is a Canadian company, so
yeah, I just don't think Canada is very nice with their natural resources. So they don't like making money up here, guys. Question to Roy: do you have any time constraint where at some point you're going to say you're done with PayPal for the opportunity cost? This is a great question, actually. I want to hear the answer.
Not really time. It's if they stumble as far as execution. I'm a bit disappointed with the read that we had from the fireside chat. There were some comments, but this was an extension from Jamie Miller's comments in an earlier fireside chat. So yeah, if we could see them continue to stumble, if we actually look at transition year 3 and it is a transition year, I'll probably tap out at that point, or at least reduce. I have reduced my PayPal. I sold all. I sold all of my options, all my leaps, way underwater. Only $90 strike. I thought I was being conservative. Still had plenty of time on them, but I sold out because of the comments at the fireside chat. I said, you know what? I have some gains to offset. So tax loss harvesting is there. I may buy those on the other end, but like right now, I don't think that I will. I really don't think so. I still have some leaps. They're in a non-tax advantage, or they're in a tax advantage account. So there's no tax loss harvesting, and I'm okay with them where they're at, even though like maybe they're just dead money and that's it. But I think the bigger factor is if I see like, I showed you guys that list of 5 names that I'm interested in, very interested in. There's other names too that are a little bit further out on the radar and I need to do more research in. Let's say we have a market event where PayPal stays where it's at and all these other names drop, substantially in value, or some of them do. If I need capital and I see a great opportunity, Rocket Lab's trading at like $11 a share. I don't expect that to happen. PayPal is gone. And I'll let you guys know. But yeah, I don't hang on to things just out of sentiment or anything like that, or nostalgia. I like making money despite owning PayPal. And so, yeah, if there's a better risk reward out there, substantially better, I will be out and I'll be into that.
Do you think it's a worst opportunity cost in the market? I mean, I guess depending on how long you've been holding it.
Worst covers a lot of names. It has been a terrible opportunity cost. So,
yeah. Dividend Master says, "How are you not long Adobe if you're long in PayPal?"
One terrible stock at a time, preferably. You got to have one to keep you humble. So, maybe after PayPal is at its all-time high, I'll pivot into Adobe that's trading at like 3 PE or something.
Ooh, okay. Last question. Will Enphase ever stop being a laggard play and an in play?
Oh, yeah. Yeah, it's solar. Solar is very cyclical. This is, I think, the 4th solar cycle that they've been through. Maybe 3rd as a public company. Double check that. They'll survive, and solar will have its time in the sun, pun intended. Again, that's probably, depending on how they fall, after midterms. Now, I'm not saying the year after midterms, but sometime after. So it's going to take a while. They also have launched a commercial line. The market needs to see more revenue from that commercial line to really believe in it and think of it as more than just a residential player. But yes, that will absolutely happen. I think that they're well led. It's just incredibly cyclical. And this solar bear market is absolutely atrocious and terrible. I'm glad that I took a small loss, got out, and added more PayPal because I like pain.
Yeah, I also think with this administration, you're better off investing in like oil and gas. And then if the Dems come into power, you're better off investing in solar, just from a regulatory perspective, like just a rule of thumb.
Yeah.
The battery company was Abcelera, Tom. Abcelera, A-B-C.
They're biotech.
What's he talking about then?
I'm not sure. Did I mention?
I think he just mistook it. He was talking about.
Oh yeah.
ABCL.
ABCL is biotech. So yeah, there's a lot of risk with biotech. If you've never invested in biotech, do a lot of research first. These stocks are very different than a lot of other plays where they will be dead money and burn cash for a long time, and then they'll go to zero or they'll go up tremendously. I'll leave it at that. We'll keep it short.
Oops, I think I accidentally doxed my driver. Hold on, let me pick this up and I'll show it on stream and then we'll wrap.
All right. And while he is doing that, thank you guys for watching and tuning in. If you don't already follow Tevis, be sure to do so. He is an incredible mind, an incredible person as well. And as always, thank you guys. Like this, you as the audience makes this a lot of fun. You know, I would love to talk to Tevis anytime. That'd be fun, but it makes it a lot more engaging with you guys here. So thank you for all your support along the journey. And yeah, hopefully we continue to see a rally in the markets as well. Take a look at that burrito. Canadian burrito. I don't know, man.
It's like way smaller than advertised, but this is still very, very, very healthy. I'm going to keep it right here, and I'm going to wrap up the stream. And you guys don't get to see the mukbang episode. Maybe I'll do an after-hours show. Who knows?
Man, you got to come to Houston where there's actually real Tex-Mex and Mexican food. I actually had a breakfast burrito that was carne asada, and it was so good this morning. Or breakfast taco, rather. Oh,
yeah. I definitely need to book a ticket to Houston. See all of you guys. Let's set that up, man. Whenever you're free, we'll do it. I'll never say no. You guys can adopt me if you want that.
Will do.
Lisbon, I'm down. I'm down to come to Lisbon. I'm gonna be in Europe soon. I can just make an easy flight to Lisbon. I can see Michelle in Houston as well, and Ray. Yeah, let me know, guys. Let me know. I like traveling. Detroit is where I draw the line. I'm sorry. You can keep your shithole city.
I'm sure there's nice things in Detroit, but I mean,
sorry. I enjoy life. I don't want to get shot. Okay. With that, let's wrap. Yeah, do not do Detroit. With that, let's wrap. Thank you, everybody, so much for watching the Bootleg Weekly. 2 hours and 41 minutes. I am sorry to my poor editor friend. I love you, and I will definitely buy you a burrito. And catch us next week, next Tuesday, for the next episode of this show. Thank you so much for watching again, and goodbye.